So let's get started. Gold and silver are excellent hedges against inflation. If you look at places that have gone through hyperinflation, such as Venezuela, even the United States in the 1970s that went through a period of very aggressive inflation, investors would have been much better off if they held gold during those periods, because their currencies got dramatically under pressure, and this took away from their purchasing power. And that's why gold and silver are such excellent hedges against inflation. Now, you don't need me to tell you that inflation is kicking in. You're seeing it every time you go to buy anything these days. It's hitting you hard in the pocketbook every time you go to buy anything these days. You don't need the statistics from the government to know that there's inflation out there. It's quite significant inflation when you can see it so clearly. When you go to buy gas, when you go to buy food, when you go to buy anything, you're seeing that inflation when you go to pay for goods. And there are some key reasons why I don't think that's transitory, as the Federal Reserve says it is. Some of the key causes of inflation, well, the key cause of inflation is wage pressure. If you've watched the news in the last number of months, I've seen on the internet and other places that there's pictures of ships sitting at ports, and they're not able to come to port with their products because there's not enough people not enough longshoremen to unload those, not enough truckers to truck those. There's not enough workers to then get those products off the trucks and into the consumer's hands. And they are demanding higher wages. And this supply chain crunch is a key factor in why inflation is kicking in so dramatically. Wages have been going up, and they will continue to go up. I mean, it's sort of a competition right now between, should I even bother going to work? A lot of people are getting compensated by the government, and they're getting compensated more money than they can make by going to work at low-paying jobs. And so they're demanding more money for their work. And these kind of problems don't get resolved rapidly. And one of the ways that inflation has been fought in the past is by the Federal Reserve. And how they would do that is by raising interest rates. Well, there's so much debt out there, not just in the United States, but worldwide, that the United States Central Bank, as well as other central bankers, really have no tools left to fight inflation. They've had an extensive period of negative interest rates. That's when you can analyze the interest rates and inflation. And right now the interest rates are at near zero. And this is not just the United States, worldwide. And meanwhile, inflation in the United States is reported at 5%. I think it's significantly larger than that. And that same kind of inflation is all over the world now. And so the central bankers they've painted themselves into a corner that they can't really get out of. If they were to raise interest rates even slightly, let alone back to the average over the last 50 years or so, they would crush economic growth. And they're not going to do that. They can't do that. And so an example of that is the debt situation. In the United States alone, the debt compared to the gross domestic product of the country is almost 150%. $1 trillion plus deficits have now become the norm over the last 10 plus years. The debt is now at 30 trillion and growing rapidly. And in that kind of a rate of a debt situation, as I said, and that's not even counting the consumers' debt situation. If the interest rates were to go up even slightly, that would decimate economic growth. And they're really, even though the politicians don't like inflation because they get blamed for it, the debt is a situation where there's the Federal Reserve is an emperor without any clothes. They can't fight inflation. So with wage pressures going up, supply chain bottlenecks, the situation with the with wage pressures, there's really, if you look out over the next couple of years and probably even much longer, inflation is here to stay. It's not transitory in any way. And so gold and silver are great hedges against that inflation. If you would have asked consumers in any of those economies that have gone through aggressive inflation, if they would have been much better off holding gold and silver over their domestic currencies, their fiat currencies, they would, if they knew anything about the price of those metals in that time, those time frames, they would have been much better off in gold and silver. And this situation that I'm talking about is not just a US American centric. It's happening in all over the world. All over the world is this debt problem. And so really the only tool, if you will, that the governments have to fight this is, and the Federal Reserve, is they have to hope for economic growth in order to bail them out of the problem that they've created. And so what they're going to do is they're going to keep printing money. If you look at the M1, the money growth in the last year, 40% of the dollars that have ever been printed have been printed in the last year. That's unprecedented. That is just enormous money printing. And this is not the case just for the United States. Again, just like the debt situation, this is happening all over the world. And excuse me, so these are trends that are not going to stop anytime soon. They're going to keep printing money. They're going to keep trying to stimulate the growth. And one of the ways that they're going to go about doing that is they're going to pump money into infrastructure. The key place that they're going to pump that money into is the electric vehicle revolution. Everybody all these countries want to push away from internal combustion engines towards the electric vehicles. And so they're going to pump a lot of that money into, one, stimulating the consumer or motivating the consumer to move away from gas-powered vehicles into electric-powered vehicles. So to do that requires a great deal of copper and lithium. In order to get the power from the energy source, they need to use copper. In order to have the power used in the vehicles, they need lithium ion batteries to be able to move around in those vehicles. But there's a point that is lost on a lot of people, in that a lot of countries, the United States and other industrialized countries, are living on very old and ancient power grids. Those power grids are in drastic need of upgrading, rewiring, if you will. And to do that, which will be required to move to this electric vehicle revolution, will require copper. Then you look at the vehicles that they produce, and for example, an electric vehicle requires hundreds of pounds of copper. Now, there's also talk that they want to move trucking into electric vehicles and buses into electric vehicles. Well, to do that is going to take tons of copper in order to, turn those kind of vehicles into electric. And so you've got a great deal of demand coming, but the supply chain of copper, okay, a decade or so ago, I heard a report that just to meet the needs, this was prior to the electric vehicle revolution, they needed to find a world-class discovery and put it into production almost on an annual basis. Every year they needed to find like one of the best copper mines in the world and keep finding them every year. Well, they haven't done that. And that's putting a dramatic stress on the supply chain of copper. And in the last year or so, some of this is starting to come home to roost. You can see it in the price of copper. The price of copper is now within about 10% of its all-time high, getting closer to $5 per pound of copper. And I think that trend is just getting started. The days of $5 plus copper are in the right in front of us, and I think that they're going to be around for a very long time. And so in order to battle that, the mining companies need to find more mines, they need to build more mines, they need to acquire discoveries that could be turned into new mines. And I'm going to talk about some of those companies that I follow that are potential takeovers of the future. And getting back to the car revolution, in order to power those vehicles so that you can move around in them, you need lithium ion batteries, or there's another form of battery which are called lithium iron batteries. This is an interesting development in the battery technology space, because the good thing about lithium iron batteries is that they don't need cobalt and nickel. Nickel has gone up quite dramatically, and there's some big issues with cobalt in that most of it is produced in the DRC and Africa, and it's done in a very inhumane way. Cobalt is, a lot of child labor is used in cobalt. And so the lithium iron battery doesn't need cobalt and nickel. It has some downsides in that the charge doesn't last as long as in a lithium iron battery. But if you're only traveling less than 100 miles a day, the charge you can get from a lithium iron battery is all you need. And those batteries are much less expensive because you don't need nickel and cobalt. And so I don't think that they're going to replace lithium ion batteries anytime soon, but they are going to be a competitor. And for lower range distances that are needed, they will be a viable alternative to the much more expensive lithium ion battery. And because they have less of a chemical makeup, they are safer as well. So you're not having, your your car or your computer, your laptop computer, or your cell phone blowing up on you and starting a fire. And so there are some great developments happening in the lithium space. And I have a lithium company that I'm going to talk about that is working with sources that are that use solar power and recyclable water and don't use toxic chemicals in order to extract the lithium from the material that they're in. And so on the copper and lithium front, got some good picks for you. On the gold and silver front, they also fall into that same category of strong demand. That demand's coming from central bankers are now filling up their hoards, if you will, in that they realize that they need something to back up their currencies. This used to be the way, prior to 1970, the United States was on what was called the gold standard. And basically what that came down to is for every dollar they printed, they had to have $1 worth of gold. And this made the central bankers and the government much more responsible, if you will. When they went off the gold standard, there was a dramatic increase in money printing and also in debt. At that time, the United States was a debt. They held debt in other countries. Now, other countries hold all their debt, as well as the country. The Federal Reserve has been one of the biggest consumers of U.S. debt. That in itself is a very scary proposition that, the central bank of the country has to help keep the balls in the air of what I think is somewhat of a Ponzi scheme. You borrow money today to pay the people that you borrowed money off of in the past, and then you keep printing more debt, and so you pay off those debtors with the money that you create from creating new debt. And that's the nature of a Ponzi scheme. And sooner or later that, and I think it's sooner, that is going to all come to roost. That's going to come to the where you sort of got to pay Peter. You can't keep paying Peter with Paul's money. And as I said, there's lots of indicators that time is coming. But if that time comes, and more central bankers, big investors, even small investors are starting to put more of their money into physical copper and silver. In fact, sometimes over the last year, we've had situations where the US Mint doesn't have enough silver or gold to produce the coins that they are having a demand for. This tells you that the supply chain is fractured. It's in trouble. And we can see that from in the pipeline. There hasn't been enough exploration in gold and silver, just like in copper and lithium. There hasn't been enough new mines in development to meet the demand. And some of the indicators that are happening right now, we're seeing a period of consolidation in the industry. We saw that in the big 2001 to 2011 bull market in gold that took it from $250 an ounce to over $1,900 an ounce. During that time, we saw silver go from about $5 an ounce to $50 an ounce. We're seeing those same kind of buildup of indicators that are indicative of a long-term, decade-long bull market for gold and silver. In fact, I was there during that last bull market, and I think the The indicators that are here today are probably stronger than they were in 2001 to 2011. During that period, gold went up 6 to 7 times its value, and silver went up almost 10x. So whether we have that full kind of same, I mean, history doesn't always repeat itself, but it often rhymes. So whether we get that full 6 to 10x on those commodities or not, even a fraction of that would see these gold and silver stocks that are currently right now, from the smallest to the largest, are trading at all-time low valuations. And so we have a situation where there's a buildup of bullish indicators for gold and silver. Meanwhile, those gold and silver stocks are trading at all-time low valuations. And this is a major reason why I'm bringing this masterclass to you right now, is I think there's a tremendous opportunity, much like we saw in the 2001 to 2011 bull market, for gold and silver to go up dramatically and take those gold and silver stocks up dramatically as well. So I put together a shopping list of companies that I think are well positioned to take advantage of those bullish indicators in gold, silver, copper, and lithium. Okay, so now I want to get into the tools that I use to assess mining companies. And I think a lot of these tools will apply to other industries as well. And let me explain that. First, we'll start with mining. Often what I'm trying to do is, there's an old saying in the mining business that some people are there to find a mine and some people are there to mine the public. This isn't a mining thing only. You see this in technology, you see it on Wall Street, you see it everywhere, that they're trying to mine your wallet more than they're trying to build a company. And so a lot of what I do is I'm trying to determine those two kinds of companies. And one of the key tools that I use is what we call in the mining industry the truth machine. What is that, you ask? The truth machine is the drill rig. What you get when you poke a hole in the ground is you send that core off for assaying. The lab comes back and tells you the facts. It tells you what is in that drill core. And companies can go through a lot of geological spin, but at the end of the day, that's what matters the most, the truth machine. You can also tell a lot about a company's motivation of whether they're trying to find a mine or mine the public by how active they are with the drill rig. For example, mine the companies, they tend not to drill very much. They tend to pay themselves very good wages. They tend to not own a lot of the stock. On the other hand, mining companies that are trying to find mines, exploration companies that are trying to find mines, or companies that are trying to build them, they tend to have much tighter share structures. They tend to have more insider ownership. And because of that, they want to keep the dilution of the stock down. And so they're very aligned with the shareholders. And that, whether you're looking at a tech company or a Wall Street company or a mining company, any company, you want to have those that are aligned with shareholders. It boggles my mind sometimes when I look at Wall Street companies mainly. I mean, the tech companies, they tend to have higher insider ownership, but those big Wall Street companies, a lot of times the people that are running those companies and making decisions for those companies have very little ownership. but they have very big compensation packages. And that often makes them do things that are not really aligned with the shareholders. So whether you're looking at big Wall Street companies or you're looking at smaller tech companies or smaller mining companies, you really want to have companies that have good share structures and lots of insider ownerships, modest compensation packages. Those are the companies that are aligned with you, the shareholder, which is very important. Now, mining companies aren't specific to having a truth machine. In the case of Wall Street, every industry has their own truth machines. Don't be fooled by that. In the case of Wall Street companies, that comes down to their earnings per share. What are the value of the earnings growth? And then what are you paying for that, that combination? If you can buy a company when they have a low price to earnings ratio and they have strong earnings growth, that is often a recipe for success in Wall Street. When it comes to a biotech companies, often the truth machine for them is the drugs that they're coming out with and where they are in the approval of those drugs and what is the potential for earnings off of those drugs. We don't need to know about, one of the big things right now is COVID, and, a lot of these drug makers are trying to get into that business because there's a lot of money to be made in that business. If you look, so that's their truth machine. If you look at technology companies, a lot of times that just comes down to their truth machine is how many people are excited about their technology and what is the potential for earnings. I mean, for a long time, Amazon didn't make any money. They pumped that money back into to the company's growth. And so it has been a fabulous performer over the last couple of decades. And the reason is that there was a lot of eyeballs on that company, and they were paying for the potential earnings. We've seen this in Tesla. Tesla has been I remember when I was talking about that at $25 a share. Now it's in the hundreds of dollars a share. And why I was talking about it at that time was they had some fires in their cars, and the stock got beaten down to $25. And I thought that they're on the cusp of a revolution, and that Elon Musk was a smart guy who is going to keep on driving that growth. And so, there was a lot of eyeballs, there was no earnings, but people were willing to pay for the potential for profits in the future. And so that's a lot of times what the truth machine is for those industries. So as I said, it doesn't matter what industry you're looking at, that they have their own truth machines. And you paying attention to those truth machines will make you a better investor in those industries or in the mining sector. So how aggressive a company is with their drill rig is one indicator. What comes out of their drilling is another indicator. And I've been very fortunate to have been able to follow the truth machine for many years. And I'm pretty good at distinguishing how to use that to determine whether the companies are find a mine people or mine the public people. And I'm going to steer you towards the find a mine group in my shopping list. But there are other tools that I use as well. Earlier, I mentioned that I think of myself as a connoisseur of news releases. I've written many news releases for public companies, And I've read many news releases for public companies, probably in the thousands. And that's, like you've heard the analysis before, that in order to be an expert on something, you need to spend 10,000 hours doing that. And I've certainly spent my 10,000 hours when it comes to looking at news releases. And what I'm looking for in those news releases is, I want a headline that really captures the attention. Then I want in their first paragraph some details about what they're announcing. And so that keeps your attention. Then I want to look at their highlights of their drilling. And then I want to look at the quotation of the key management people that make comments on these news releases. And what I'm trying to look for in there, not just the data, is what the company is trying to present. There's a nuanced way of looking at this that I can determine whether a geologist wrote that news release, and is he trying to speak to other geologists and impress other geologists. I don't think that's the right way of going about things, because at the end of the day, they should be talking to the investor. Another thing I look for in news releases is I try to determine, are they selling to me like a used car salesman sells a car to a consumer? And you don't need to be a geologist, a geophysicist, a geochemist, or an analyst. You have those tools yourself. You know what it's like when someone's trying to sell you a bill of goods or sell you a used car. You can get a pretty good sense for that just through your life experiences. And so, I'm trying to determine, is the data good? And what is their motivation in how they write those news releases and what they're presenting to me? If I feel like management is, a used car salesman trying to sell me a used car, I get a sense that they're more about trying to mine the public than they are trying to find a mine. These are some insider baseball stuff. And, I'm kind of glad that people have to pay for this in order to watch it. If it was for free, I'd probably get some hate mail and by those that are trying to mine the public. But I really don't care. I'm about you. I'm about me as an investor. And I want to refine what I'm seeing in order to bring you a shopping list and find future companies that I want to talk about. And so I get a good deal of sense of that from the Truth Machine, how companies present that in their news releases, what the data is. But then after that, I also go into their websites and I look at their websites. I'm not a big fan of glitzy websites. Again, it comes down to sort of my business suit indicator. When I go to mining conferences or I've been at presentations for investors, oftentimes these executives will come in really fancy suits. And right away, I think, well, they're more into appearance than they are into substance. And another indicator is that someone's paying them a good wage. That's their shareholders to pay for those fancy business suits. You notice I'm wearing one of my Levi's jeans shirts today, and I'm a big believer in that business suit indicator. And so I remember back in the day when I first got in this business, long before the internet, companies would send out their quarterly and annual reports. Some would come in these very fancy and expensive packages and presentations. And others would come in more nondescript ways. They just basically presented you the facts, the figures in a much less glitzy fashion. And if you guessed that the ones that came out with the less glitzy were the better performers, you'd be absolutely correct. And so I'm not a big fan of really glitzy kind of websites. I'm a facts kind of guy. I'm a no nonsense kind of guy. I think you can probably get a sense for that in this masterclass so far. And so again, the glitzy website is sort of falls into my business suit indicator. I don't want to see glitzy and expensive. I want to see the facts. When I get to the website, then I want to look at their corporate well, first I look at their news. The news is what gets my attention. But then I also look at their corporate presentations. And then there again, I'm trying to get a sense, like if a company is wanting to talk about their stock price and you know where that stock price is going to go in the future, you know, again, that's more of the, you know, something that should raise a red flag to you. It's red light time that you should have your guard up, because they're probably more interested in stock promotion than they are in mine finding. And that's what comes down to those that are different from those that want to mine the public or those that want to find a mine. You can get a sense for that in their corporate presentations. If their corporate presentations contain a lot of information about their projects, where they're drilling, why they're drilling, what they've drilled, what's around them, that's a find a mine company. That gives you the green light to go ahead. Keep looking at that company because they're most likely most interested in finding a mine. And so that gives you the green light to go ahead. Keep looking at that company. There's a reason why I produce a lot of interviews, and that's because I'm trying to use my years of experience to ask the questions that investors need to know. Later in the masterclass, I'm going to provide you with my YouTube channel. And on my YouTube channel, you're going to be able to find a lot of these interviews and my analysis of news, so that you can get a better sense of what they are, what the company's motivations are, if you will. Then it comes down to valuations for me. And it's not always about finding the company with the lowest valuation. It comes down to what is the valuation relative to their potential. What I call that is the valuation to potential indicator, or index, if you will, or ratio, some people would call it. But I'm really trying to determine, are they looking for something, and have they found something that is going to be worth considerably more than their current valuation? And so as I go through my case studies of the companies that are on my shopping list, I'm going to go through that process with you to look at their valuations, to look at their website, to look at their news flow, to look at their corporate presentations, to find the green light stocks, if you will. Another thing that I'm going to provide you with when I talk about these companies are stock charts. Now, I wasn't always an advocate of stock chart analysis. I sort of had to become one because during my career, I've been a guest on business news in Canada. The CNBC of Canada is called BNN. I used to appear on there quite a lot. And what I found was that people didn't just want to hear about good fundamental stories. They also wanted timely picks. And so that forced me into being more of a chart analyst. It really wasn't a something that was a hard sell for me. I've loved math since I was a kid. I was somewhat of a math whiz. So that's what charts are all about, the numbers. And so it wasn't a hard sell for me to get into charts. But again, I don't really want to make you fearful that you have to be, really complicated about your chart reading. I focus on a key group of charts, and those have been around for a long time. And the reason that they've been around for a long time is because they work. And so I've always found that the best technical analysis or chart analysis are those that keep it simple. For me, the trends in the stock price and the trends in volume tell me a lot about what to look for. For example, on the volume side, later I'm going to talk about flatlining stocks. Well, a lot of times you can see that the end of that flatlining period is close because of changes in volume. Sometimes you'll see that the volume dries up, and the stock price, has been on a flatlining pattern for a long time. And when the volume dries up, that tells you that a change is most of the people that have wanted to sell have sold. And those that own the stock or the supply of the stock, again, stocks come down to supply and demand as well. The holders of that supply are the shareholders. And if they're not interested in selling, and, that creates a tighter supply. And if you then start seeing a spike in volume, increases in volume, a lot of that at times, if the shareholders are holding on for dear life, that stock chart is going to go higher. One of the key charts patterns that I look for are what are called cup and handle formations or trends. What that means is you'll see a high, and then you'll see it come down and flatten out and then start to go up. And that cup and handle is a very bullish indicator that a stock is going to go higher. Now, me being me and the greedy kind of guy that I am, and you should be as well, I like to find them when they're on the bottom of the cup and they're ready to go towards the right side of that cup. And again, there's some key indicators that sort of lead you to understand that bottoming is ending. It comes down to that supply and demand scenario with stocks. Are the sellers sort of exhausted? They've sold all that they want to sell, and are the buyers holding on for dear life? And when those two come together, and the volume dries up, and then you start seeing an increase in the price, it's when there's lower or higher lows in the stock chart and higher highs. It's an indication that it's coming out of that bottoming formation. And now you get a situation where not only are the shareholders, the holders of supply, holding on for dear life, but now there's new buyers coming in that are fearful of missing out, and that combination takes stocks higher. And so that's a good indicator of whatever chart you're looking at, that when the volume sort of starts to see changes where the sellers have sold and the buyers are holding on, and then they get some catalysts that can drive that stock price higher and bring more investors in, then you get a trend where you get the right side of that cup. Another important chart that I look for, I mentioned already, which is flatlining stocks. They've gone through a period like the bottom of a cup and handle, they've gone through a long period of flatlining where it doesn't move up much, it doesn't move down very much. And there's an old saying in that people, technical analysts that look at charts, they say the longer the base, the higher it goes in space. Basically that comes down to the indicators that you're looking in flatlining stocks, which is that, you know, and in bottoms of cups, is that you come to a period where the volume dries up, the sellers have sold, the buyers, the shareholders, the holders of supply aren't interested in selling. And so then you're looking for a catalyst that can create more excitement and create more demand for that stock and drive the price higher. Another chart pattern that I look for is what's called a golden cross. And what happens in a golden cross is that the shorter term indicator, which is the 50-day moving average, starts to trade above the longer term indicator, which is the 200-day moving average. And when the short-term trend line, your 50-day moving average, moves above that 200-day moving average, it's called a golden cross. And that is one of the most bullish indicators that you can find. Now, I've got some in my shopping list that have already in the recent times, over the last couple of weeks to a month, that have gone through that golden cross. But I have others that are still haven't gone through that golden cross. And some of the catalysts that I believe are going to drive them up are not just their own drilling and developments, but it's also the price of gold, silver, copper, and lithium. I think that they're going to continue to go higher, and that will drive them through that golden cross. And me being, again, the kind of guy that I am, I often try to find them before the golden cross happens. And so that's another important indicator, and what I look for in chart patterns. Sorry, I got to look at some of my notes. I want to keep this flowing I don't want to bore you too much, because I could talk about some of these things for hours. But there you have it. I'm going to talk about some of my key indicators. You'll have seen them on the screen. And then what it comes down to is, okay, we've found companies that have good news. We've looked over their corporate presentations and their websites. We've looked at interviews, and they have a good group of catalysts on their own right. And then the secondary catalyst, sometimes it can be more important of a catalyst, is the trend in gold, silver, copper, and lithium. And I've shown you some of the trends that are happening in gold, with the bottoming of the price of gold and it heading higher. Basically, it comes down to, we're starting to see in all of these chart patterns, there's something that happens when they're coming out of their past trend and they're heading towards a more bullish trend. And that's, you start to see a pattern where there's higher lows in their stock prices and there's higher highs, and that creates a channel that is going in the bullish direction. Volume increases are another indicator that, you know, volume dries up at the bottom, and then when things are getting better, you start to see increased volume because you're getting a new demand coming in for that stock. Or in the case of copper, lithium, gold, and silver, more people are getting excited about that. I've talked a lot about those indicators that I've looked for in the charts, in the news, in the corporate presentations, what I look for in the truth machine. And so now we're going to get into the case studies. We're going to look at the specific companies that I have on my shopping list. We're going to look at their indicators, including their stock charts. So let's get at it. So let's get started. We're going to start with the gold picks. And the first pick that I'm going to talk about today is i-80 Gold Corp. Their stock symbol is IAU on the Toronto Stock Exchange. Their website is www.i80gold.com. Their current valuation is $643 million. They are a website sponsor, and they help me to be able to bring my content, the free stuff that I'm going to tell you about later. They're a gold miner. They're focused in Nevada. They have a portfolio of assets which has them primed to become a much larger gold mining company that will receive what I call the Nevada premium. I don't believe that they've received it quite yet, but I think that's coming. They're following the same path to success as a young American Barrick, which grew from a small miner in Nevada to one of the largest gold mining companies in the world, currently known as Barrick Gold. They're a household name in the industry. And as you can see, I've got their website up here. The first thing I'm going to go to is their press releases section. And the one thing that I really like about when I start my analysis of a company is a lot of times you can gain a lot from just reading the headlines of their recent news releases. In this case, on November 22nd, i-80 Gold to proceed with underground program at McCoy Cove. Before that, i-80 Gold intersects high-grade gold in expansion drilling at Granite Creek. i-80 Gold reports 2021 Q3 results. i-80 completes PEA for Granite Creek. i-80 Gold intersects high-grade gold in underground drilling at Granite Creek. i-80 announces filing of the Ruby Hill project technical report. i-80 announces filing of the Lone Tree property technical report. i-80 closes acquisition of the Ruby Hill mine, launches Nevada focused mining complex. As you can see, it just keeps on going. They've had a tremendous amount of good news out in the last little while. And in fact, later in the show, I'm going to give you the YouTube channel that you can find all my past reports on and my interviews. And in there, you're going to see some good ones from Ewan Downey, who is the CEO of the company. And he talks at length about some of these good news releases. I believe one we talked about is this one here. i-80 Gold. The headline was i-80 Gold intersects high-grade gold in expansion drilling at their Granite Creek project. First 4 holes returns 14.7 grams per ton gold over 10 meters, 16.3, actually they're in the highlights here. You'll see the highlights are 12.8 grams per ton gold over 6.1 meters, 16.3 grams per ton gold over 7.1 meters, 14 grams per ton gold over 10.2 meters, and 16.4 grams per ton gold over 3.4 meters, 16.5 grams per ton gold over 5.3 meters, and 5.1 grams per ton gold over 6.7 meters. What's impressive about this are a couple things. One, the average grade is, for my American viewers, is over a half a gram or half an ounce per ton gold. Very profitable stuff. There was a good quote in this news release, and I quote, The expansion program at Granite Creek is demonstrating the significant upside opportunity and confirms the potential to materially increase high-grade resources, stated Tyler Hill, who is the senior geologist of I-80. He went on, and I quote, "The fault structures are becoming more competent at depth, suggesting the potential for increased widths, improved ground conditions and mineability, and enhanced continuity within the gold-bearing structures. Visually, every hole of the step-out program has intersected strong alteration and faulting," end quote. This is a big statement in a lot of regards. First of all, it was not what's called infill drilling, where they're drilling in an area where they already have a zone established. This was step-out drilling, so it expands the known zones, which is very important. I also was very impressed with the information that as they go deeper, they're getting increased widths and have improved ground conditions, which helps to their mineability and enhance gold continuity. That continuity is very important because that's what makes up mines. When you have continuity of your high grade, that is what makes up mines. Is you need that continuity to make a mine. And next, I'm going to take a look at their stock chart. As you can see, they were a flatliner for most of the summertime this year, and then they had a big breakout. That was due to one of their very good news releases. Then they had another period where they've been kind of digesting the big move that they made. I think that they're making an important bottom here. And last time I spoke with Ewan Downey, he had a lot to talk. He had a sense that he had a lot to talk about in the near term. So I expect to be doing more interviews with Ewan. And I think that, again, that will help to see their stock trend move higher. I think that it is very cheaply valued here at these values, and with a good news flow ahead of them, I think that they can deliver some very good news. So have a look at them. Again, I think that this is a company that's oversold right now. And as they put out more news, they have the catalysts to help the stock move higher, which, looking at the various companies that I follow in the mining sector, these guys have a tremendous group of projects, assets that can help them move forward. Not only do they have great projects that they're drilling, they recently purchased a processing facility that will allow them to be able to process material at their own facility. This will help their economics out, help them to become a even more profitable miner. And again, I think that this one is one that will receive that Nevada premium that I was talking about. Okay, next on the list is Orla Mining. Orla Mining is a company focused in Mexico, and they're going to be a new producer of gold in the next few months. They're already starting to stack their material and in preparation for heap leaching, which is a very low-cost method to recover gold. One thing that I wanted to mention here is what's called the Lassonde curve. Pierre Lassonde is a very famous mining guy. In fact, he at one time ran he ran one version of the royalty company called Franco-Nevada. Then they were bought out by Newmont, and he became the CEO of Newmont. He's also been the president of the Gold Council, A very distinguished gentleman, and has done a lot of good research. And this is what's called the Lassonde curve. And you can see some parts here. This is the life cycle prior to discovery. Then they have a big run up in as they make a discovery. Then they kind of go down and have a lot of times this, what's called the development discount window, lasts for quite some time. Then they start producing and they have another run up, oftentimes much higher than the exploration excitement. And then as they mine out that project, it starts to fall back down again. Depending on, of course, if they have other mines, which will help that not happen. But the reason I bring this up is that Pierre Lassonde is putting his money where his mouth is. He's a big shareholder in Orla Mining, and they're at that bottoming of the development discount window. They're late into that development discount window. And now they're on the verge of starting the next big run in the life cycle of a company that makes a discovery and then brings it into production. As I said, they're about to turn that mine on. When they do, and this is a very important point, they will become one of the top 10 lowest cost producers of gold in the sector. That's a very important point because those are the companies that always have a higher premium than their peers. One of those companies that's gone through that period over the last number of years is a company called Kirkland Lake. Kirkland Lake, I'm going to talk about them later because they have an important discovery that turned them into a very profitable mining company that is relevant to some of the other companies that I'm going to talk about. But they had a significant premium over their peers, the other large mining companies. And it was because they were a low-cost producer. Before we finish talking about Orla, I'm going to go to their stock chart. And a couple things I'm going to bring up here. One, you'll notice that from around July until just recently, they were pretty much flatlining, big little ups and downs, but primarily following a flatlining kind of a trend. And now it looks like they've made a significant breakout. And I think they're on the verge of a golden cross that I talked about earlier in this course, this masterclass. And when they make those golden crosses, a lot of times there's a lot of upside in those golden crosses. I think that this company is maybe a month or so away from making a golden cross. In order to have that golden cross, they'll have to keep going up over the next couple, 2-3 weeks. And that's right around the time that they'll be starting to the early stages of the mining process at their property. So Orla Mining is another one that I consider for those that want exposure to gold, but they want a little less risk. And that's why I started out with two of the biggest companies that I follow. They're less risky than the rest of the companies that I follow, but they're also well positioned for outstanding share price increases. And that's why I like those two companies. Now we're going to move into the exploration end of things. The next company is Newfoundland Gold Corp. Over my career, I've seen some rushes, gold rushes and other metals that have caught the imagination of investors. One of the most famous is the California Gold Rush. Obviously, I wasn't around for that, but it's really what opened up the western part of the United States in the 1849 Gold Rush. In fact, the reason that the San Francisco football team was called the 49ers is because of that gold rush in 1849. There's been others after that. You saw them move up to the Yukon in Canada and Alaska. There's also been, during my career, I've seen it in diamonds in Canada. There was a big gold rush when the first diamond mines were found in Canada, caused one of the world's largest staking rushes. A couple of 2-3 important mines were found there. There was a base metals rush in Eastern Canada when Diamond Fields Resources made their big discovery of base metals, including nickel, copper, and cobalt. And that caused another tremendous staking rush. We've seen it in other countries as well, not just in Canada, the United States, Mexico, other countries, South Africa. There's been a lot of gold rushes and a lot of big mines were found, and those that were early into those rushes and they picked good companies, they saw remarkable returns. There's one happening right now in Newfoundland. I follow several companies in the region, and I'll discuss them starting with Newfound Gold. Newfound Gold is, their stock symbol is NFG. They trade on the Toronto Stock Exchange Venture Market. Their website is newfoundgold.ca. Their current valuation is $1.17 billion. And these guys really got the Newfoundland Gold Rush off the ground. A year ago, they were trading around $3 a share, and then they ran up to $13.50 a share earlier this year. Since then, they have had around a 50% haircut. What caught the market's imagination is they hit extremely high gold. But that wasn't the only thing that affected their valuation. The gold that they found is in what's called the Appleton Fault. I don't want to get too geology on you, but what the faults are they're big cracks in the earth. And those cracks go deep, deep down to the upper mantle. And it's in the upper mantle that you have the fluids that contain, in this case, gold. And these faults, these cracks in the earth, create a path of least resistance where the gold fluids can make their way close to surface. One of those famous ones is the company I mentioned earlier, which was Kirkland Lake, the mining company with an excellent valuation due to their high margin gold production. And where that primarily came from was their Fosterville mine in Australia, when they put into production their discovery of the Swan Zone. What's interesting about that is they spent about 20 years of mining in that area, and then they found the Swan Zone, which helped the bottom line of Kirkland Lake quite dramatically. And that's there's a dual combination of what makes this such an exciting area. Is the New Gold Rush, the Newfoundland Gold Rush, is the combination that they have this geology with these deep faults, cracks in the earth that have allowed the fluids to come up, and they've drilled into it. And that's what's got the market's imagination, because not only does it look like they can find one Swan Zone, they look like they can find multiple Swan Zones. I'm going to bring up their news section. And here's some of the headlines. Newfound announces the closing of the acquisition of the royalty interest. Newfound closes a $48 million investment by Eric Sprott. He's been a phenomenally wealthy investor in mining companies. In fact, part of the reason he's so wealthy is that Kirkland Lake that I talked to you about. He was in that before they found the Swan Zone that made him into a very highly profitable mining company. They also announced, Newfound announces the acquisition of the royalty interest underlying its Keats Golden Joint and Lotto discoveries. Those are the big ones that they've already found, and it looks like they can find more. Newfoundland initiates use of Chrysos photon assay method for Queensway drilling and anticipates reporting first assay results shortly. In these high grade, they're called nuggety gold, and what that means is that in the drill core they'll be very high grade, but in a small nugget, and so this makes it difficult to assay them with representative samples. If you could assay the entire core and not split it and then send half off for assaying, it would be much better. And this photon assay, basically it's like using an X-ray to evaluate the core, and they can use the entire core to assay. So that gives them a much more representative idea of what the actual grade is. I'm not going to read off all of their news releases. They have plenty of news releases for you to look at, but those are the key factors of what makes Newfoundland Gold Corp such an interesting company, especially at this time. Now let's look at their stock chart. Back here, you can see that big move up to 1350. Then they came back down. They hit a low right around $7. They bounced off that low, came back to about $10.50. They've come back down again, and they have bottomed again. So they've made like a triple bottom here. That's a very important technical indicator to me. Another thing you want to look at is the blue line is their 50-day moving average, and the red line is their 200-day moving average. So one's a longer term indicator, the other one's a shorter term indicator. What I see happening here with these two indicators is that I think that the stock is oversold and will start to move up. And what that means to these trend lines is that that 50-day moving average will probably not reach the 200-day moving average, or if it does, it will bounce off of that and move much higher. So not only do I like this company's fundamental story, I also like what I'm seeing in the stock action, triple bottom and a 50-day moving average that I think will bounce off the 200-day moving average. So I'm expecting this one to go higher, and you should do your homework on this one as well. The next company I'm going to talk about is Labrador Gold. They're also in Newfoundland. They share that Appleton Fault, that deep crack in the earth that allows the fluids to go up. They've also found high-grade gold in their drilling, and also they've done a significant amount of surface sampling around that fault. And that's how you find new areas to drill. Not long ago, I had an interview with their CEO, and we talked at length about that sampling that they've done and how impressive it is, and that it will likely lead them to future discoveries. And I think because they also have a big portion of that Appleton Fault, that they have the potential to find multiple swan zones that I mentioned earlier. They're well funded for aggressive drilling. They have a modest valuation and fantastic valuation to potential ratio. Let's take a look at some of their news releases while we're on their website before we talk about their stock chart. And here's right off the bat, Labrador Gold intersects 76.24 grams per ton gold over 0.5 meter and defines the new footwall zone at their Kingsway project. Prior to that, Labrador Gold announces the receipt of drill permits for Appleton Fault targets and mobilizes drills. Labrador Gold samples 338 grams at a new discovery at Golden Glove which is 3.5 kilometers from their big vein project, or target, if you will. September 16th, Labrador Gold intersects 128 grams of gold over 1.12 meters at their big vein target on the Kingsway project. August 18th, Labrador Gold intersects 44.08 grams per ton gold over 4.28 meters at Big Vein. These are definitely bonanza grades, and they are over mineable widths. And the targets, they have a bunch of targets, and the known stuff that they've already drilled into remains wide open. As I said, these deposits, they tend to go very deep, 2, 3, 4,000 meters below surface. And along the way, you can often find these zones that I call jewelry boxes. And the Swan Zone that I mentioned earlier is one of those jewelry boxes with a few million ounces of gold in it. That is very high margin gold. Again, there's a whole bunch of headlines and a whole bunch of news releases there for you to read. And I invite you to do that kind of homework, because I think you'll get a sense of why they have that potential to go much higher. And also, I would invite you later in the course here, I'm going to include my YouTube channel where you can find a bunch of news releases, including interviews with their CEO as well. So let's go to their stock chart. Labrador Gold has the left side of the cup here, and then it's gone down and is creating a bottoming. I think that this is another one that will bounce off of the 50-day moving average, will bounce off that 200-day moving average and start to head higher. They've also made a triple bottom back here at around 70, 72 cents, a higher one, one slightly higher. And I think that they're oversold as well. And, you know, a lot of these companies that I'm talking about have two catalysts, more than one catalyst. One is I think that gold, as I talked about earlier, will head higher. That's one catalyst that tends to rise the boats in the industry. And also the most important, which is news flow. I think they have a lot of news flow ahead of them that can help them to be catalysts to move much higher. And Labrador Gold, LAB, their website is labradorgold.com. They currently have a valuation of $118 million. This is definitely cheap relative to what they're looking for. They're looking for new swan zones. And if they find some of those, which they have a high potential of doing, and not just one, their valuation will be much better. And so I like their prospects to move forward. The next company I'm going to talk about is Sokoman Minerals Corp. Sokoman Minerals stock symbol is SIC. They trade on the Toronto Stock Exchange Venture Market. Their website is SOKOMANMINERALSCORP.com. They currently have a valuation of $65 million. They are also a website sponsor. Again, these companies that are my website sponsors, they help me to be able to produce the content I do for free. And again, I'm going to show you where to find that. I've had several interviews with their CEO, and they're worth checking in on those interviews. Now, these guys are in a different part of Newfoundland than the companies I talked about previously, which are Labrador Gold and Newfound Gold. But the Appleton Fault that those companies are on is not the only game in town when it comes to these deep structures, these faults, these cracks in the earth. And they have the potential to find a big high-grade gold mine as well. They've done a significant amount of drilling, pretty shallow drilling, really. And it was somewhat hampered because it looks like the guts of the zones that they've been hitting are under a lake. And they've kind of been needing to drill from the sides of the lake with angled holes to reach the main guts of the system. But they have a method to help them with that problem, in that they not too long ago started drilling from a barge. They put a barge on the lake, and then they put the drill rig on top of that barge, and that will enable them to have easier access to what is likely the key parts of the whole system. This will now enable them to better understand the direction that system is going along strike. So let's say from north to south and at depth, which is the really important part of these kind of systems. And so, but you can't just start poking holes deep into the ground. They get expensive. You need to understand from the near surface mineralization what's happening with the direction, it's called the dip or plunge, of the vein systems, so that you can then target deeper. And that's another benefit of this barge drilling, is that they'll be able to determine the faulting and also the direction of the mineralization, so that they can then start chasing that gold deeper. And again, these are deep structures that go on for thousands of meters, and they're only in the first couple hundred meters so far, and they're already finding the bonanza grade gold. They're well funded for drilling. They have a modest valuation and fantastic valuation to potential ratio. Let's go to their news section and read some of their headlines. Benton and Sokoman announced gold discovery at Grey River Gold Project in southern Newfoundland. Sokoman reports first barge-based drill results at their Moosehead Gold Project. I'm going to click on that because we can look at some of their drill results. 4.95 meters of 27 grams per ton gold, only 41 meters downhole, so they're right at surface. 4.2 meters of 14.72 grams per ton gold within 9.8 meters of 6.65 grams per ton gold. Again, only 53 meters downhole. This map here, it shows what I was talking about earlier. These black dots are where they set up the drill rig, and then these lighter black lines are the extension of the drill holes. And as you can see, they either had to set up on the west side or the east side, and they had to drill these long holes to get down to the guts of the system. And now these larger black ones are the ones that they've reported and are starting to understand more about that system at depth. There's a table with all the results. Another news release they had out recently, Sokoman and Benton, more high-grade high-grade lithium results from their Kraken pegmatite project in Newfoundland. Benton and Sokoman enter into mutual participation agreements regarding cost reimbursements under their strategic exploration alliance. Sokoman has 100% ownership of the Moosehead project, but they've also got this alliance with Benton where they collectively go out and look for other kinds of projects. They've found lithium, they've found gold, so this company doesn't just have exposure to one project, they have exposure to multiple projects. They are now looking for not just gold, but they seem to have maybe stumbled upon a lithium discovery. I'm very bullish on lithium. It's crucial for battery technology, for the electric vehicle revolution, the electric car revolution. And it looks like they've got a really good lithium project that they can start doing more drilling on and get excited about. And so that's the basic guts of the Sokoman story. Here's their stock chart. Again, you're going to see the left side of a cup, a bottoming formation, a 1, 2, 3, 4 bottoms on this one. Here you see the 50-day moving average. It went through the 200-day moving average. That's called the bearish cross. And now I think that they will start to see that short-term price movement upwards that leads them towards a golden cross. And I'm kind of a greedy guy when it comes to these kind of trends. I want to be in before the cross actually happens. And I think that that's exactly where they're headed, is towards a golden cross. Those are very bullish trends. And oftentimes when they go through a golden cross, they go much higher than where that golden cross happens. And so there you go. They've got a good story on their various projects, their key project being Moosehead, where they have found lots of high-grade gold. They have a bullish story on their stock chart that I think has had a significant bottoms and is ready to start heading in the upwards direction towards the golden cross. So take a look at Sokoman Minerals. Next company up is another website sponsor. This is Tru Precious Metals. TRU is their stock symbol on the Toronto Stock Exchange Venture Market. Their website is TRUPRECIOUSMETALS.com. Their current valuation is $11 million Canadian. They are to the south of Sokoman, and in between the two of them is a very important deposit. It's called the Valentine Lake Mine. It's owned by a company called Marathon. Marathon is going through the permitting to build a mine there. And this is what you call elephant country. 4 or 5 million ounce gold deposits are your elephant kind of gold deposits. And that's important because that Valentine Lake structure, again, these cracks in the earth that allow the fluids to come up, is on all of the companies I just talked about from Sokoman. South of that is the Marathon Gold. South of that is where Tru Precious Metals is involved. And as I said, not only do they have that big mine to the north of them, they also have another one to the south of them. So that tells you a little bit. I mean, we're talking about 100+ kilometers where you have big things being found all along that. That's why those deep structures, that cracks in the earth, that are so important to the gold exploration business and all exploration for that matter. They've had a string of successes recently. Recent drilling hit visible gold with assays pending. Visible gold is an indicator that they could have some high-grade gold to report. Doesn't mean it always happens. As I talked about earlier, they cut the core. Half of it is kept for future use. Half of it is sent to the lab. And sometimes you get unlucky with how you cut that core. You want to do it on a standard method where it's always in one direction and in one side of the core that comes out of the hole. So I'm keeping my fingers crossed that that visible gold hit that they found returns promising grades. I think that it will, because I generally follow companies after they've made a discovery. I followed this one and invited them to be a sponsor of my website because I saw some things in their pre-drilling that gave me the hope that they would find good stuff with their drilling. One was that Appleton or that Valentine Lake fault that I was talking about at the southern end of Tru Precious Metals project, they have a sort of a double hinge to that Valentine Lake fault. And those double hinges, again, I'm going to get a little geology on here, are called dilation zones. What they basically are they're places where the main fault is very prospective, but when you get bends in that fault or jogs or hinges in the fault, that's an even better place to look for gold, because that's a prime place where the rock has been prepared in a way that it opens up the rock and allows those fluids to come up. And that is where they found the visible gold at one of these hinge zones, is where they found the gold, the visible gold. But then I just had an interview with Barry Green, because they had another important news release out just recently. And in that, there was some maps here that I want to bring up. One is this map where these yellow dots are places where they did surface sampling, and they found high counts of gold in the surface sampling. And a couple things I'm going to highlight here is there's this portion here, which follows the Valentine Lake corridor. And then you've got another group here. This is what's called their Jacobs Pond area. You see there's a cluster of a bunch of samples with gold in them. And then over here as well, you've got another area where you have a bunch of hits of gold. Again, I'm going back to this rock preparation thing because it's so important. These bends, these meeting points of structures, cracks in the earth, are very important places where you can find gold. And they're drilling near one of these areas right now, looking for some more gold in the drill hole. Here's another map. This is a magnetic map. Think of it sort of like going over the earth with a very sophisticated magnetic detector. And this is a magnetic high here. Barry and I talked about this in our recent interview, and this is an area where there's been a lot of cracking of it's a more broken up area. But what I want to highlight here is at the contact of that high mag area, and this is the contact of another package of rock that is associated with that fault, those faults that I keep talking about, those cracks in the earth. And it's right at these contacts and sort of where two of them meet that they're finding all these hits of gold in their surface sampling. This is very important stuff. And that's why they've highlighted in their news release. Here's another important picture. This is the Jacobs Pond area. And from that area, this triangle here, they found this rock that had 14.3 grams per ton gold, 11% copper, and 368 grams of silver. That's some very rich rock. And often where you find that kind of rich rock is where you're going to find it in your drilling as well. And that's why I'm looking so forward to the drilling results from both the area where they found the visible gold in their core, which is farther to the south than this, what they call the King George IV area. And now they're currently drilling at the King George IV area. So lots of catalysts ahead for this company. Let's take a look at their stock chart. And here's another one. I hope you're noticing this trend like in gold. The left side of the cup, a bottoming formation, a double bottom. And now it looks like that 50-day moving average is going to make another run at that 200-day moving average for a golden cross. There's some more evidence that that is going to happen. As I talked earlier in the show about, which is rising bottoms are higher lows. As you can see here, you've got a higher low between these 2 points, and you also have a higher high. This creates a channel, and that channel is pointed in the bullish direction. Again, this is the kind of trend, but you don't just want to look at trends. You also want to look at, do they have the catalyst that can keep these trends going in the right direction? And as I talked about from their news, they've got the King George IV current drilling, which I hope that they're going to make, and I think they will make some discoveries on that. And then the project to the south where they hit visible gold in their drill core, that remains pending as well. So yes, they definitely have a lot of catalysts to keep these trends going, and I think it will lead them to a golden cross. And as I said, those golden crosses tend to be an indicator of much higher prices for the stock. So there you go. Tru Precious Metals has a good combination of catalysts from their fundamental story and a stock chart that looks like it's heading higher. They have a super cheap valuation, and they're really in the early days of making what I think will be important discoveries. So do your homework on Tru Precious Metals, because I think that they've got an exciting future ahead of them. Okay, now we're going to move off from Newfoundland over to Quebec. And Amex Exploration is a company that's also a sponsor of my website. Their stock symbol is AME. They trade on the Toronto Stock Exchange Venture Market. Their stock's website is AMEXEXPLORATION.com. They have a $254 million valuation. I've been following this company for a few years now, long before they ever were a sponsor of my website. At that point, they were trading at 50 cents a share. Today, they closed at $2.95 a share. So they've had a, almost a 6x run on their stock, but I believe that they have much higher to go. And let's pull up some of their news releases. And then I'm going to go to their corporate presentation because there's something I want to show you in that corporate presentation. So here's some of the news releases. Amex reports 8.25 grams per ton gold over 44.8 meters and 1.22 grams over 64 meters at their Denise zone. Prior to that, they had Amex drills high-grade gold from their HGZ zone. This is in close proximity to their Denise zone. There they had 43 grams per ton gold over 6.9 meters. Prior to that, Amex drills copper-rich VMS mineralization and first follow-up drill hole on their project that VMS is, the name of that is volcanic massive sulfides. Again, not going to get too geology on you, but what that happens is you get a volcano comes up and follows these big deep structures, and they create these very high grade VMS deposits. And so not only does it look like they have a high grade underground target at their project, they also have a open pit target, Denise, sitting right beside that. That's important for a couple reasons. That could be what goes into production first because it's right at surface. And as they mine down in an open pit, that opens up easier access to the deep drilling at their high grade zone. They're that close in proximity. So this is some, they've got a heck of a combination there. And let's go to their corporate presentation. I want to think you can easily find it on their main part of their website. And here's their corporate presentation. I'm going to download it here. So let's take a look at their corporate presentation because there's one specific thing I want to show you. as I mentioned earlier, when it comes to high grade gold, what you need to find is continuity of that high grade gold as you go deeper. And there's a really great um, image here that will help you to show you that oh, there it is. So you see all these purple and red dots? Those are the high grade hits inside of that high grade zone. And as you can see, there's a continuity of those high grade hits that is quite easily distinguishable. Remember I said you want to connect the dots. Well, those dots are the dots I'm talking about. Over here, not too far away, there's only about a 300-meter gap in between these two zones, is the Denise zone. And here is what will likely make up the open pit of that mine. And it still remains open over here. And so maybe that pit could be extended over to include the top part of their high grade zone. But when they get to the bottom of that pit, that potential pit, they would have easier access to start drilling to follow this high grade zone at depth. Here's another example of that high grade continuity. It's just in a different form. But this red zone here, or pinkish zone, is where they've hit all that gold of those dots that I showed you earlier. Then there's a structure here, and then they pick it up on the other side of that structure. And again, it just keeps going and going and going. And also what's impressive is as you get deeper, it seems to be getting bigger and higher grade. And again, that's often what happens in these orogenic gold deposits, like the one I talked about earlier in Kirkland Lakes, Fosterville mine in Australia. The Swan Zone was about 1,000 meters, which is very similar to where these guys are getting the wider, bigger zones that have higher grade. So it's a tremendously exciting project on this high grade zone alone, but then you've got that Denise zone that was talking about. And then earlier you can see over here, let's get to the map that shows their new VMS discovery, because that is a high grade copper. So there again, copper is really important for those electric vehicle revolution. And it looks like they got a sweetener. Not only do they have gold, but they've got a sweetener of a high grade VMS target that looks quite exciting as well. As you can see, they just have, remember I talked earlier about how, you can sort of differentiate between whether a company's trying to find a mine or trying to mine the public. And the key thing you want to look for is, look at this corporate presentation. They don't talk at all about their stock, or very little. They give you some details about how much stock they have out and the ownership. But look at all these maps they show of all the drilling that they've done and the hits that they've had. And that's the hallmark of, that's the green light I talk about, where you want to really start rolling up your sleeves at these kind of companies. So yeah, I see one slide that shows you their stock chart, who owns big positions in it, how much stock they have out, and what their current valuation. Then they start talking about their people. Then they start talking about where they are, the big regional structures that are important, where all the big mines have been found. Then they start going into showing you their core shack and more geological information, more drill hole information. Again, these are the green lights that you look for in a company, because they tell you that these guys are trying to find mines. And in this case, I think that they could find a few. One of them a high grade mine, the other a low grade open pit type of mine, which by the way also has high grades for those kind of targets. And now they've got this copper rich VMS discovery as well that looks quite exciting. So let's take a look at their stock chart. And here's a perfect example of a golden cross. Right there where I have that target is the golden cross. If you went back a little further, you would see that they made the left side of a cup as well. Then they made the bottoming, and now they're going up the right side of that cup. And they've actually shown, while they're having that golden cross, they're showing the handle. Once they make that top on the right side of the cup, the pullback the less that pullback is also a very bullish indicator. And that's what they're seeing right here. And it's happening when they've had the golden cross, they've had the bottoming, and now you see here, higher low, higher low, higher low, and a very steep higher highs. And when you see those steep higher highs, it often is an indicator that they're going much higher. So they've got that nice higher low and higher high channel, the golden cross, the catalysts, it all adds up to, a stock that looks like it's headed higher. So have a look at them. Before I leave Quebec, I've got one more company to talk about in Quebec, which is Kenorland Minerals. KLD is their stock symbol. Their website is KENORLANDMINERALS.com. They have a $37 million valuation. And this company has many projects on the go. It's not just Quebec. They also have projects in Ontario and Alaska. They're partnered up with major mining companies as their partners on those projects. And what's interesting about that as well is that the partners allow them to be the operators of the exploration. What that's an important indicator of is that those major mining companies have a lot of confidence in the exploration talents in Kenorland, and that's why they allow them to be the operators, which is, again, excellent, fantastic confirmation of their exceptional team that they've have. The key project that excites me is their Fretet project in Quebec. I'm going to pull up their corporate presentation. Let me get to that. Here it is, presentations. Let's talk a little bit about their Fretet project. We're going to view that right here. Oh, sorry, I clicked the wrong button. Where are their corporate? Here's their corporate presentation. Sorry about that. So let's go down there. They talk about, again, let's just look at this from the sense of what I talked about earlier in my video, where you're trying to determine whether a company is a mine the public kind of company or a find the mine kind of company. And you can tell a lot in their corporate presentations. So they start out as a standard disclaimer, then they get into their team. They got a great team involved with this, their technical team, the exploration projects that they have. They have a various different, here you can see the partners, Sumitomo, Newmont, Barrick, Freeport-McMoRan. Those are the upper echelon of the biggest mining companies in the world. They have a little bit of information about their share structure here. Common shares 51 million, fully diluted 61 million. Remember earlier I talked about companies having tight share structures. That's definitely what they have. Then they have a breakout of some of their key management and insiders own 45% of this company. Remember I said you want to be aligned with companies that have large insider ownerships. They're aligned with the shareholders, and they tend to use their money more wisely because they don't want to dilute themselves through secondary share offerings to bring money into the company. They talk about their working capital of $9 million. They have shareholdings in other companies of $2.5 million. They have revenue when they're the operator of a company, they get an operating management fee that's brought in $3 million. So now let's get into their projects. Alaska, they have 100% owned Canicross. They have the Healy project, which is optioned to Newmont, one of the largest gold mining companies in the world. In Ontario, they have a project that's optioned to Barrick. Then in Quebec, they have a series of projects that are optioned to Sumitomo, Newmont, and a couple that are 100% owned. Frette is the one that really excites me the most, and I'm going to get into why that excites me the most. Down here, we're going to get to the Frette project. You see this area here. This is an area where they've done significant surface sampling and found lots of hits with their sampling. There's another area over here where they've got another series of hits. Down here, another series of hits. Over here, another series of hits. These are all excellent places to be looking. But here's the one that really gets me excited. The 2020 and 2021 drilling highlights. You're going to see lots of hits of high-grade gold there. The black dot is where they set up the drill hole. The black line is the direction that it went. And as you can see, they drilled into 2 veins with these series of holes here. It remains open over here, and they remain open at depth. Over here, you start to see a couple more veins in the drilling, more veins over here. These vein systems tend to come in clusters. And, you know, where you find one, you find more. But what's quite interesting about this is these are not small veins. These are not thin veins at their surface expression from east to west, or sorry, north to south. They're quite thick for these style of veins. And that's very exciting. I don't know if I don't think they have over here a map that show, or a section. Actually, what we'll do is we'll go back to their website, and we're going to go to the main part of their website into the news section. And I did an interview with their CEO. Again, you notice a lot of these companies I've done interviews with, it's because I like them so much. I reach out to their companies, and I get on the horn with them, and I try to get into interviews with them. And commences, no, that's not the one I want to go to. That's that they commenced drilling in the summer on that Frette project. Let me find the news release where we did an interview about their drilling results. Might be this September 8th one. Let's see if I can. No, that's a more of a general update. I don't want to waste my time here trying to find that news release, but what I saw is not only are you looking for continuity along the linear expression, or what's called the strike length, you're also looking for continuity inside the individual drill holes, and then in between the individual drill holes as they go deeper. That's exactly what they have at Frette, which excites me tremendously about Kenorland. Final point that I wanted to make is that Kenorland has on their board of directors, Sumitomo elected one of their geologists as to be on the board of directors. This gentleman is really important because the style of vein systems that they're looking at, Sumitomo owns one in Japan called the Hishikari mine. And this is a series of veins, just like I'm talking about here, that have great continuity and big high-grade zones inside of those vein systems. And he's been the geologist at Hishikari and also in the mining. So he understands how to look for these kind of deposits and also look and how to mine them. So he's a really key person for the team when they already have an exceptional team. He helps them with advice as well. So let's go on to their stock chart. And here you see again that it's the trend I keep talking about with gold, the left side of the cup, the bottoming. They've been going through the bottoming phase. They've had a triple bottom, and now those bottoms, they're getting higher lows, higher lows, higher low, higher low, higher high, higher high, higher high. Those trends of higher highs and higher lows and the bottoming are what you're looking for. And I think that what they have in store for them is a golden cross as well, where the short-term trend goes above the longer-term trend. And it's a very bullish indicator. It's been around for a long time because it works. And again, I like to get in before the actual cross happens. But when I talk about this company in the future, that's what I expect to talk about, that they've gone through a golden cross. And to cross that, they would need to be over 86 cents. And they're currently trading at 70 cents. So I think they've got a golden cross ahead of them in the next 6 weeks to 2 months, and then much higher to go. And again, do they have the catalysts? They're drilling right now at one of their best projects, in my opinion, which is Frotet. And then they've got a whole bunch of other projects that they'll keep working on and keep getting drill results from. So that news flow trend can go many, many months into the future. Not only do they have some pending that should be coming out fairly soon, but they have a whole news flow for a long time into the future. So that's why I think that their chart can go much higher. Okay, now we're going to move from Quebec over to Ontario. And in Ontario, there's a company called, well, it's a combination. They got a great discovery in Alaska and the potential to make a discovery in Ontario. Let's start with the Alaska discovery. At their Alaska project, again, this is another company that I've done interviews with recently that you're going to be able to find on my YouTube channel. And let's look at some of their news releases. HighGold announces drill program at their Munro Croesus project in Timmins, Ontario. I'm going to talk about that more later. They announced the closing of an $18.8 million financing, so they got lots of money. HighGold intersects 18.7 grams per ton over 56 meters at their JT deposit. Why that's so important to me is that here you've got the makings of what is a resource where they have almost 1 million ounces in their resource. And then they started drilling outside of that resource area, and that's where they hit this big stuff that was recently announced: 18.86 grams of gold and 2.43% zinc, 0.47% copper over 56 meters, 31 grams of gold, 1.82% zinc, 0.58% copper over 32 meters, 64 grams of gold, 1.49% zinc. It goes on and on here. The point is that as they're drilling outside of that resource that they have, they're finding more juicy stuff. So they're going to work on an updated resource early in 2022. So there's a catalyst that they will have in front of them. But what really got me excited, and I did an interview with Darwin Green. By the way, Darwin Green is an old friend of mine. We used to work together. I've always known Darwin Green to be a no-nonsense kind of guy, a really smart geologist. It's no wonder that he's made a big discovery, and here's the one I'm talking about. Away from that area, a significant distance away from that area where they have the resource, they hit a new discovery with 578 grams of gold and 2,200 grams of silver over 6.4 meters. Not only is it important that they found high-grade gold, but that 6.4 meters is a very thick intersection for a high-grade gold discovery. And it's indicative of the power of the system that brought the gold to where they've drilled into it. And that goes back to what I talked about earlier, continuity of high grade. That's what I think that they're going to find at this Difficult Creek prospect as part of their claims in their Alaska Johnson Tract project. I think that it's got the potential of having very good continuity to it. And they have assay results pending from some more holes there. They also drilled other regional holes. One has a very good geophysical target that I like. And there's also the potential that this all could be connected. The zone where they found the resource, this new discovery, and this geophysical anomaly, they could all be coming together at depth, which makes things tremendously exciting. The target that they're drilling, the geophysical target, looks like one of those deposits that I talked about earlier, a VMS, a volcanogenic massive sulfide. It's a volcano pushed that hot fluids up through the cracks of the earth towards the surface. And in these VMS deposits, in addition to gold, silver, you also find copper and zinc. Remember that news release we looked at earlier? They got sniffs of copper and zinc in there. So this is all evidence that these all might be associated somehow. It'll take a lot more drilling, but I'm keeping my fingers crossed for my old friend Darwin Green there, because I hope he finds something like that at his Alaska project. But before we get on to their Alaska project, let's go to this Ontario project. This one also is very exciting. As you can see here, this is their key project. And here is the where there was a big high-grade mine. It wasn't, or sorry, it was very high grade, but it wasn't very big. It was mined back in the early 1900s by, rudimentary methods. And then for many decades, there was no work on this because it was a patchwork of projects, bunch of claims owned by different people. And then Darwin and his HighGold were able to consolidate those. And so now they've come together, and here is, I keep talking about these faults, these big cracks in the earth. Here is one, Monroe. Here's another one, Pipestone, that comes right through their project. And then look at that star. That's where they found that tremendously high-grade mine. And let's go further. Let's go back to the news release there. Oh, they don't show it. That mine, they actually have some specimens of that in the Royal Ontario Museum because it was so rich with gold. It's amazing that that project went for decades, multiple decades, with no exploration. It's not, there's a reason for that. As I said, it was broken up into a bunch of small little claims, but now they've got it all in one package. HighGold owns that package, and they're drilling right now around that extreme high-grade mine. A good place to find a new high-grade mine is where there's an old high-grade mine. It's the same kind of rocks, the same kind of geological structures. It's the same story, and often these are they have multiple veins in clusters. And so I'm keeping my fingers crossed that that one I don't think is even priced into the shares at all. Here, let's look at their stock price. And This is a little different than the ones I've been talking about so far. You see it was coming down, 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 and then it went vertical. The reason it went vertical was because of that extreme high grade gold that I was talking about from their drilling at their Alaska project. For the last couple months, they've been sort of digesting that big move. And they had a golden cross here. And I think that trend is going to go much higher. And again, you got to look back at the catalysts. Well, they've got more assay results coming from their drilling in the Alaska. They're currently drilling in Ontario. Not too long into the future, that will start generating news. Not long after that, they should have a new resource calculated for their Alaska project. And then not long after that, they'll be ready to go back and start drilling in Alaska again. And they could continue drilling in Ontario if they hit something really good there. So again, this is another one with what is a modest valuation of $109 million when considering what they're looking for. They've got their golden cross on their stock chart, and they've got tons of catalysts ahead of them that have the potential to move the stock quite higher. So a great combination of things for HighGold. Alaska and Ontario is their areas that they're exploring right now. And I think that they're going to continue to have lots of good news into the future. Okay, so now we've covered Newfoundland, we've covered Quebec, Ontario, Alaska. Now we're going to move down to sunny Mexico, where I live. Actually, I live in the state of Zacatecas. It's the most important state in the world for silver mining. 10% of the silver ever produced in the world has come from mining in Zacatecas state. And a couple hours south of me is where Xali Gold Corp, Xali is how you spell it. It's got a couple pronunciations because it's some call it Xali and some call it Xali. It depends whether you're a Spanish or an English speaker, but their stock symbol or their website is xaligold.com. This is a new sponsor of my website. They only have an $8 million valuation. And in addition to them being a sponsor of my website, recently they've done a private placement that I'm participating in, where I'm putting some of my own money into that private placement. And that private placement is important because that will give them the money to do some drilling on their projects. So let's get into their projects now. In Mexico, this is the one that really excites me the most. El Oro is what it's called. And El Oro has quite an impressive story around it. In the past, that it was mined on 2 veins inside of a cluster of, I think, over 30 veins in the entire cluster. 2 of those veins produced 8 million ounces of gold. And what's remarkable to me is that all of those veins aren't drilled off like crazy. You know, that's a trend in Mexico where a lot of these, there's a lot of under exploration in Mexico. It's quite remarkable considering how important of a mining camp it is. But nonetheless, Xali Gold has that project. Let's look at some of their maps because it will show you just how impressive this series of veins are. Here you can see all the various different veins. It's just a swarm of veins that goes east to west over an area that covers, each of these squares is about 500 meters. So you're looking at 1,000 or more meters from east to west, and from north to south about 1,000 meters. And only 2 of these veins ever saw all the mining, which just blows me away. You know, that they weren't Swiss cheese, so to speak. so it's got quite a series of exciting things there. Sorry, I got off their website. I better pull it back up here because I need that before I talk about their stock charts. So I'll put them back in the right order. So there they are again. So Xali, sorry, the El Oro, what makes me very excited about this project is not just that cluster of veins that remains underexplored. They've done, these are called epithermal veins, and not to get too excited, too geology on you. These veins tend to have a depth that can go quite deep, but it's usually in a zone, it's called the boiling zone. They tend to be about 300 meters in vertical depth. Sometimes there's what's called stacked boiling zones, and their drilling suggests that they have one of these stacked boiling zones, and that opens the window of the boiling zone to about 600 meters. And you know, you can get multi-million ounces just in the 300 meters. When you've got 600 meters, you can get very big deposits. And what that's indicative of is that the fluids were boiling around there and coming up over and over and over again over long periods of time. It's called a long-lived system. And they've got these stacked boiling zones. So they've got a big, they've got a big opening at depth where the previous mining only went down about 300 meters because that's the standard model. But now it looks like they've got boiling zones below that. So they've got open below the old mining that produced 8 million ounces of gold. They got the strike extension, and they've got multiple veins to explore. It's a tremendously exciting project. It really shocks me that they only have a valuation of, what is it, $8 million Canadian. And that's not their only project. They also have up in Newfoundland, and I'm going to go back to some of the companies that I talked about in Newfoundland already. Sokoman, Marathon, and in between Marathon and Tru Precious Metals, Xali Gold has the ground in between Marathon and Tru Precious Metals. And they share that same deep structure, that cracks in the rock that help bring the fluids up with gold in them. And they've done some surface sampling, and they're also using artificial intelligence, machine learning, to help them target in Newfoundland. So again, this is a company with a great combination of projects. And let's go to their stock chart. So this has been a patchy trader, a flatlining trader, but that's because they haven't been doing a lot of drilling over the last year. Now they've raised some money so they can get drilling again. And that's the kind of catalyst that can really make for explosive moves in a stock price. And, you know, that's why I participated in the private placement. One of my best friends also put a chunk of money into the private placement. So in the not too distant future, I think that they are going to have a flurry of news that is going to be quite impressive. So take a look at Xali, and I think you're going to see this little flatlining company that was patchy trading. Until recently, they've started to have some increased volume. That's when I started covering them and doing interviews with their CEO, and that's often an indicator. When you get these flatlining patchy traders, you see the low volume. When you start to see this higher volume, it's an indicator that things are about to change. In this case, they've raised some money. They're going to start drilling. They've got exciting projects. Keep my fingers crossed, but I think that this is one that can blast off from that flatlining trend and have a much more bullish trend. So keep an eye out for Xali Gold. And again, check out their website and do your homework on them because I like them a lot. So next up for you, we have another silver company. This one is Blackrock Silver Corp. They're in Nevada, the silver state. I don't know if everybody knows that this is considered the silver state because it's most well known for gold, but originally it was well known for silver. And that history is kind of important with this company because they are in one of the key mining camps that created the silver state, if you will. And they are found high-grade silver and gold in Nevada. Let's look at some of their recent news. That includes BlackRock closes $7 million private placement led by $2 million investment from First Majestic Silver. That's one of the key silver mining companies. So it's a good endorsement that what they have is for real. And just how real is in their October 12th news release when they announced that BlackRock Silver drills 5,080 grams per ton silver equivalent over 0.9 meters within 4.1 meters of 2,027 grams per ton silver equivalent, and cuts multiple 1 kilogram per ton intercepts at Tonopah West. Very high grade stuff they have down there. And it's no wonder this was a major mining camp. Now, part of the reason that it fell out of favor was because years ago when they were producing in the late 1800s, 1900s, and when the price of silver got dramatically lower, they were deeper in the ground and they just didn't have the technology to be able to keep producing at that low price. And this caused the mining to halt. And then for decades, it didn't see any exploration or development because the claims were held by multiple parties. BlackRock Silver was able to get those consolidated into their company, and they basically took over half of that Tonopah regional area of mining interest. And then in September 21st, they announced that BlackRock Silver advances their district scale targets on the newly staked Tonopah North property. Let's talk first about the high grade nature of what they have. As I said, you know, their last, a big news release was that one I just read off to you. We'll scroll down. Here's some of the highlights you can see on the screen now. 4.1 meter grading 2,027 silver grams per ton silver equivalent. Core hole TXC 21-010. Got to make those shorter. Cut multiple high grade zones on the Mule, Paymaster, and Merton veins, with Mule vein returning 1,006 grams per ton silver equivalent over 0.7 meters. And that is made up from gold and silver. They have a whole slew of news releases, and we're going to read into that later when we go to their corporate presentation. I'm just scrolling down here to see if they have, there we go. So there you can see what's called a cross section. Think of it somewhat like cutting a cake in half, and you're looking at the side of it. And here you can see 1, 2, 3, 4, 5, 6 veins that they hit. All those lines are drill holes that have intersected these veins, and the red numbers that are highlighted are all some of the high grade hits that they found at this area that they're talking about. So they have a cluster of veins. as you can see on this map, this is a plan map. So now we're looking from the surface, or from high up down, like if you were in an airplane and you were looking down. And here you can see just a massive amount of veins. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. They have multiple veins on this property. Later on, I'm going to show you their corporate webs, or their corporate presentation, because it has some good information in there. But before we get to that, I wanted to talk more about this Blackrock Silver advances district scale targets on the newly staked Tonopah North property. And if you can go down, as you see on this map, so you see all these green and pink maps, or those are claims that cover their known veins and where they've been drilling. But this blue stuff here is the ground that they added. And you're going to see a black line here, almost like a horseshoe. And that horseshoe represents the edges of a volcanic package of rocks. And again, I've talked about this earlier, that volcanic events are what help bring the fluids that contain gold and silver in them up to the surface. It's never been drilled, this area, and it is a major area to expand. As you can see on the southern part of that horseshoe, if you will, that's where they have all those veins. Another important part about this is the shape of the that you see in black there. Why that's important is it's a big curve in the rocks, and that it has a way of preparing the rocks, like I talked about cracks in the earth, to prepare the rocks for those fluids to make their way up. So that makes this a highly prospective package of claims that they've acquired, and they're going to start drilling those. And I'm very excited about that, because if they're successful with that drilling, it could just blow the top off of this completely. Here's their corporate presentation. And as they highlight the Silver Queen's Maiden, down here they have some information about their stock. As you can see, institutions that hold it include First Majestic, Eric Sprott. Eric Sprott is a billionaire investor in mining companies, very smart guy. Then they go into that they have actually 2 projects in Nevada. This one that they're highlighting here, they plan to spin that off to shareholders sometime in the future, quite possibly, their Silver Cloud project. And that's in a good package of rocks. They've had some success there as well, hitting silver and gold. It's a very highly prospective group of projects. But then they started drilling down at Tonopah, the Tonopah Silver District, and started banging into a bunch of their rocks, high-grade silver and gold. And that really got their focus to move towards this Tonopah Silver District. As you can see here, there's a piece of rock, and I don't want to get too geology on you, but this is indicative of the kind of rock that we call long-lived system. Basically, what that means is the fluids have been circulating around in this rock for very long periods of time, which is, a lot to do with why they have found what they found. So getting back to that silver state, Comstock was the big granddaddy of them all. Then it turned into the Tonopah, which is, as you can see, welcome to the silver state. That's what they've been known as. They talk about some of the top silver production countries in the world. Mexico is one of those. And the United States is 10th. Here's some of the old pictures from the old historical mining, the town that was built around that mining. Then some of the average grades that were mined in the past, back in the early 1900s. They say that they're picking up where historic miners left off. And here is a picture of the old claim maps, just chock-a-block full of different landowners that sometimes that was passed on from generation to generation. And then Blackrock was able to consolidate that all into what you see here, which is their claim boundaries. They talk about the infrastructure. It's right near a town, and I've heard that people can take their coffee, drive right to the project, and it's still warm when they get there. Here is a slew of high-grade hits and drilling. Indications of where they've hit gold. Here's that map with all the veins that they have. Here is the Victor vein. This one I'm very excited about because it has some very high-grade gold in it. And they're not even including this in the resource, their maiden resource calculation. It's on that series of veins in the other map, but this one also looks to be well endowed and has the potential to go much deeper. This map shows you the series of veins that they are doing their maiden resource calculation on. That should come out in the next few months, and it will give you an idea of just how big this series of veins is, let alone their other veins and that exploration ground. This map shows you the distribution of silver and gold and the kind of zones that are opening or have been drilled into and are still open to get bigger, and the direction that they will future. Then they talk about this Tonopah North. That's that horseshoe-shaped volcanic rock area that I'm very excited about. I can't wait to hear them drill into that. And so, as you can see, I think it's quite evident that they have a lot of going on for them, plenty of catalysts. They're drilling and they've got more drill results to announce. They've got that maiden resource to announce. They can do more drilling on the Victor vein and that northern area. So they will be very busy with the truth machine and drilling in the near term. So before we go to the next company, let's go to their stock chart. And as you can see here, like a lot of the companies I've talked about before, on the left side of you see, or on the left side of the chart, you see the left side of a cup. Then they've had the bottoming, and they're one of the only silver companies that I follow that have gone through a golden cross. And now they're trading below that 50-day moving average. To me, they're looking very oversold here, especially considering that there's not a lot of good silver focused companies out there. And especially in Nevada, which is such a mining state. This is a very good project for those that want to look at silver companies. And as you can see in the last 8-9 months, this is near the lows that you could have bought it at. They've also made a series of higher lows, even though this one is not very much higher. It did stop right around their 200-day moving average, which is a good sign, and I expect them to bounce off that. They're looking very oversold, and at any time now they could put out drilling results. In fact, may even be out before this course goes public. So they've got a lot going for them. BRC is their symbol. They are blackrocksilver.com. So that's BLACKROCKSILVER. And they trade on and their valuation is 140 million. I'm expecting that to, well, it's already been higher than that, quite dramatically, actually. So they're on sale, and that's why I picked them today. So that's the final of our silver picks. Next up, we're going to move into copper and zinc. These are base metals that are needed for very many products, and they tend to be big mines. And they, like silver, not as many companies are focused on them, which is very bullish for higher prices due to less exploration and mine development that could move the price of their prices higher. And yet, with copper especially, you know, with this move to the electrification of vehicles, copper is in short supply with high demand. We're starting to see the governments spending a lot of money to force that revolution in cars. And, you know, they need more copper to make that happen. And so I wanted to get on to now Candente Copper Corp. Their stock symbol is DNT.V on the venture exchange, the Toronto Stock Exchange venture market. Their website address is CANDENTECOPPER.com. They currently have a valuation of $49 million. What makes this company special is that they, in their previous drilling, they were able to show a resource of 9 billion pounds of copper and 2 million ounces of gold, with the room for that to get bigger. I think they are a takeover target. They've already completed a preliminary economics assessment, and they're now doing a new one that will help them to improve their capital costs in those estimates and their operating costs. So that is what I think will likely lead them to a takeover. And while I'm on this company, recently I was asked about how I go about valuing and looking at the companies that I am bullish on. And this is a perfect example. If you look at the last 20 years of takeovers in the copper space, when a company has a preliminary economic assessment, they generally are sold for 3 to 5 cents per pound in the ground. That, and with $5 copper, which I see coming, that is more likely to happen closer to 5 cents. But currently, they're trading at a valuation that is less than, well, it's a fraction of a penny per pound. So whether you use the 3 cent per pound of value of copper in the ground or the 5 cents, they are looking at something that could be a, you know, a 10x kind of buyout price. And, you know, you just don't come across those very often in the copper space. So I really like what I see with Candente. Let's look at a few of their news releases. And one of them, Candente Copper agrees to commercial terms with Goldfields, a big gold mining company, to option the Erikpe property field work for environmental studies for drilling completed at Canariaco. That's some of the work that needs to be done to permit a mine. Candente Copper commences exploration program on the Canyon Creek Copper Project in British Columbia. On September the 9th, they stated updated PEA commences on the Canariaco Norte Copper Project. And that's that is the most crucial catalyst that they are working on. And this will help them to get a revaluation, in my opinion, and likely put them into the category of a takeover target. And so I think now is a very good time to be looking at someone like Candente Copper. Not too long ago, I did an interview with Joanne Fries, who's the CEO of the company. Again, later in the show, I'm going to send you to my YouTube channel. And there, if you hit updates, you'll be able to see all my recent videos. And you'll find the one with Joanne Fries. She also runs Xali Gold, which I talked about earlier. And that interview is on there as well. So let's take a look at their stock chart, because I think it's quite easy to see that as copper has been performing very well over the last 6 months, that they've had some important movement in their price. Prior to this, they had been a very cheap and underloved company, but if you look around the middle part of September here, they made a low, then they made a series of higher lows. And that is why they've recently, approximately 2 weeks ago, they had a golden cross. I think I've made my point about golden crosses. They're very bullish. And again, it's when the 50-day moving average moves over the 200-day moving average. I think part of what has driven that movement is the bullishness in the price of copper. And secondly, with this pending preliminary economic assessment. These guys are dirt cheap. And I think that as they get more work done, that preliminary economic assessment and more blue sky on the price of copper, I think that you're going to see this stock continue in its bullish trend that it's been, moving into over the last couple of months. And Candente Copper DNT is another one for you to look at. It's keeping with the copper theme. We've got another company for you called Northwest Copper. And this company merged with another company to create Northwest Copper. One of the previous companies was a company called Serengeti. And I had been following that Serengeti in my reports for a number of years. And what I liked about the company was that they were finding a very large resource with their drilling. When you do a bunch of drilling, you're able to establish approximately how much copper is in that ground. And they had a very big resource. But what excited me about that resource was that they also put their geophysical data out. And in that geophysical data, you could see that the drill holes in that resource was still above a very large geophysical anomaly. And now, just recently, over the last couple months, they started drilling deeper. And here's some of their hits. Well, let's go back to the one that really caught my attention. In October the 27th, Northwest Copper intersects 33.6% copper equivalent over 9.4 meters within a 235-meter interval of 2.92% copper, discovering a new style of high-grade mineralization. And guess where they found that new style of high-grade mineralization? Right where that geophysical anomaly starts. And so not only did they talk about that new style of mineralization, but getting back to the story about cracks in the earth and structures that allow the fluids to come from deeper, they also found a new structural element to that. So I think they've opened this up dramatically. And I think that Quenica project is a tremendous project. I mean, if you look at even the 2.92% copper equivalent, that's underground mining grades. You don't need to open pit mine that stuff. You can underground mine that kind of grade, especially when you get some kickers inside of that 235 meters, which kick out 33.6% copper. So very, very exciting stuff. Let me see if I can quickly Oh, no, that's not the one I wanted to touch on. Let me go back and see if I can see a cross section of any kind. Again, those cuts in the earth where you can see like you're looking at the side of a cake. There it is. So as you can see, right in that central part of the projected, see these lines here. That's their open pit confining resource. So now you need higher grade to go under that. And look what they're hitting. They're hitting some really spectacular high grades. And that remains open at depth. And that's also where that big geophysical anomaly is. So I think they've got some great things ahead of them for that project. It's already known to have a very large resource, and I think it's only going to get better, and possibly when it gets better at depth, it will get better with super high grade copper. And let's take a look at their chart. So they haven't quite made a golden cross, but they certainly have bottomed. And then they had that massive high grade hit that drove their stock practically vertical. Since then, it has been consolidating, but you'll notice that it's consolidating significantly above the 200-day moving average and the 50-day moving average. So whether you're looking at the long-term trend or the shorter-term trend, in the past year or two, you haven't been able to buy it for not a lot of a premium compared to what they have found and announced recently. So they'll continue to drill, and I think that they are going to continue to deliver exceptional grades. And I haven't even talked about their other project, which looks quite spectacular as well. So you kind of get two bangs for your buck here on a copper focused company that is aggressive with their drilling. They have a known resource and lots to go take a look at on their website. Let me, before we leave, I'll say that Northwest Copper Corp, their stock symbol is NWST, another company that trades on the Toronto Stock Exchange Venture Market. Their website is NORTHWESTCOPPER.ca. Their valuation is $104 million. And with all the catalysts, I think that this is a great one for you to take a look at. Now we're going to go to Aston Bay. And let's take a look at Aston Bay, some of their recent news releases. Oh, before I do, their stock symbol is BAY. They also trade on the Toronto Stock Exchange Venture Market. Their website is ASTONBAYHOLDINGS.com. Their current valuation is a paltry $9.8 million Canadian. They're mainly focused right now in Virginia, where they found gold and base metal discoveries. They're currently drilling and they have more assays pending. I'm kind of a people watcher, and I do that because I often can, if you're a poker player, you can tell a lot about the person you're playing against by looking at their actions. And the guy who runs this company, he's a super reserved guy. He'd be a hell of a poker player, to tell you the truth. And recently there was a conference called the Metals Investors Forum, and he was very pumped up, much more pumped up than I've ever seen him. And I've been following his company for a few years now. For a very reserved guy like that, he was almost giddy with excitement. And this was right around this news release on November 12th. Aston Bay expands land package and drill program after discovering SEDEX-style mineralization at its Mountain Base Metals project in Virginia. So I'm going to go to his quote. We are very excited to partner with another local private landowner to examine the tremendous potential in this underexplored base metal belt, stated Thomas Ulrich, who's the CEO of Aston Bay. He goes on, and I quote, "We have significantly expanded the mineralized footprint and confirmed that this is a sedimentary exaltive system." Not to get too, I'll tell you the less technical way of looking at that. This is just what our team, led by Don Taylor, has been targeting. SEDEX deposits are an important source of base metals worldwide and are prized for their large-scale potential and consistency. Well-known SEDEX deposits include Red Dog in Alaska, Sullivan in British Columbia, Mount Isa in Australia. These deposits form in basin environments and usually from caps with multiple occurrences. The prospective lithologies in Virginia that Don Taylor targeted as potential SEDEX hosts are virtually unexplored for this deposit type before now. Samples from the initial drill holes are at the lab, and we eagerly await the results. We are excited to continue drilling, end quote. In fact, they showed some of this drill core, and it looks highly prospective for copper and zinc mineralization. And that's what you find in these SEDEX style deposits. Think sort of like a cake, if you will, and this would be one of the layers of a cake. And those SEDEX system cakes tend to be very big. Those mines that they mentioned are just spectacular mines, highly profitable, been around forever. And he also mentions Don Taylor. Don Taylor had a massive success with his company that found a big deposit in Arizona. He won a bunch of awards for that. The company was ultimately taken over at and they were a tremendous success. The reason I know this is I featured them in my reports multiple times when interviewing a gentleman who does what I do, which is he's an analyst. His name's John Kaiser. And in the early days of that, we did shows and we talked about this company at length, and he kind of laid out the path to success before they even completed it. And the stock went from 20 or 30 cents all the way into the dollars where it was bought out. And so it was a tremendous pick for me. And it looks like, and John Kaiser, and it looks like Don Taylor may be on the verge of doing it again. I certainly think that the Thomas Ulrich's, the guy that plays his cards close to the vest, and he was kind of jumping around at that metals invest, not literally, but figuratively at that metals investors forum. So I think that there's a pretty good chance that in the not too distant future, this company is going to be able to deliver some very good copper and zinc numbers from their drilling, and they continue to drill. So they've got the catalysts. Now let's look at the stock chart. If you want to see a stock chart of a flatlining stock, here's one you can see until the recent news release that they put out. Since then, remember I told you that one of the things I look for in a flatlining stock is when they get a spike in volume. It's often a sign that, that they're sort of turning the corner. And as you can see here at the bottom right, in their volume chart, while the stock was firming up, it also firmed up on aggressively high volume relative to the year before that. And this is due to the optimism around what they've found at this copper zinc target. And again, here, as it's getting that higher volume, it had a golden cross. Another one here on my list that I think things are shaping up. If you were only a technical investor, a golden cross is a very bullish indicator. But again, it comes down to the truth machine, what they're drilling. And I think they've got plenty of catalysts ahead of them that will enable them to, deliver on the potential that you see in a company when it makes a golden cross. So stay tuned for more news about Bay, BAY, on the Venture Exchange. I think they're onto something very exciting, and I believe you want to take a close look at Bay because they're, as I said, they have a minuscule valuation, and if they deliver with the copper and the silver, or copper and the zinc, I think that this stock could go parabolic like it did already once recently. Okay, now we're going to get on to lithium. And this company is the company where I'm the CEO of the company. As I mentioned earlier, I'm very unique in the business. I only have a couple of peers that are executives of mining companies and also do market commentary, which puts me in a pretty unique position because I know firsthand what it takes to create a winner in the space. And part of that is if you go to you don't just want to look for the project, it's also about the share structure. Our company only has about 80 million shares out and a very modest valuation, especially considering our move into lithium about 6 or 7 months ago. And another thing you want to look at in the share structure is the insider ownership. I own approximately 8 or 9% of the company on a fully diluted basis, and our chairman owns over 20% of the company. So collectively, we own close to a third of the company. So, the reason that I say to look for that is because, we're aligned with the shareholders. And let's talk about the lithium because that's the major focus of our company. Yes, our name is Advanced Gold because we are, prior to the move into lithium, we were focused on gold and silver. We still have very good gold and silver projects for exploration purposes. And in the future, I could foresee that we will probably spin those out to shareholders. So what that means is that we would create another publicly traded company, and the shareholders of Advanced Gold would then get shares in the new company. Recently, we completed a $500,000 financing, and we've got a bunch of development plans on the near horizon. One of those is we're filing to have a name change. And we want a name that more reflects our focus on lithium. So stay tuned for that. One of the big private placement groups in the financing is a group that does digital marketing through their website, stockhouse.com. Stockhouse.com has 10 million monthly unique visitors, and the average visitor visits 33 pages per visit. So that calculates to 300 million page views per month. So they have a very good audience, and a lot of those are into lithium. So I'm hoping to be able to present to them in the not too distant future our company. So let's look at these pictures here are these lithium and potassium bearing salt lakes are quite large. In fact, you can see them from Google Earth. And here you can see one of our 13 salars. Here's another one. And these are not small. In this case, you're looking at over 1,000 meters by probably 1,500 meters. Here's La Donacella, about 1,000 meters long by, let's say, 600 meters wide. Here's another one, about 1,000 by 1,000 meters. Maxi, it's kind of hard to calculate, but in this longest section here is probably about almost 2 kilometers by 1.5 kilometers. El Perdido, it's well over 1 kilometer wide by 1 kilometer north to south. Chapala is more like a cigar shape. The long part of that cigar is a few kilometers long, 3,000 meters by, let's say, about 500 meters wide. El Barril is a little bit smaller, let's say about 1,000 meters by 1,000 meters. Hernandez is almost 2 kilometers long by close to 1 kilometer wide. Chapala, probably slightly over 1,000 meters by 1,000 meters. El Cristalino, you're looking at about somewhat of 1,000 meters by about 500 meters. Saltaria, it is, 1.5 kilometers, 1,500 meters by probably close to 2,000 meters. These are big deposits, and that's why you can see them from Google Earth. Here's more Saldivar. And then down here, you see the distribution of lithium and potassium and boron. There's quite an array of grades ranging from lower grade to higher grade. And these are all starting right at the surface. So you can get at them. I've driven across some of them with a truck, and you can actually drive across them with a truck. So that's my company, where I'm the CEO, as I said. And we, in the last 6-7 months, we've moved into lithium in a big way. I'm very bullish on lithium because it's so crucial for not just electric vehicles. Yes, of course, it's important for electrical vehicles. They all need batteries so they can move around. Those are lithium ion batteries. So they all use a lot of lithium to create those batteries. But if you look at other alternative energy sources such as solar or wind, and in order to get the power from where they're making that power out to the consumer, guess what you need? Batteries as well. These are trends that, the world is moving towards. And so whatever alternative energy source you need, that comes about, which I believe will, you're going to need lithium ion batteries as well. So that's why we moved from being a gold and silver focused company into a lithium company. And in the not too distant future, we're going to make that brand more well known when we change the name of the company and start doing drilling. When we do that drilling, I plan on sending half of the core to an assay lab where you can get the grades as you go deeper. Those grades that I mentioned earlier, or showed you earlier, were from the first meter of below the surface. We're going to drill deeper, and oftentimes what happens is that they get richer as you get deeper. And so we want to show that, but then we also want to take those and get the assay results so that we have a sort of a baseline grade, or a head grade, if you will. And the other half is going to go to, not only are we involved with lithium deposits, we have also recently, we have a key person that is a technical, he's a mineral engineer, mineralogist and a chemical engineer. And he's invented a new method to extract lithium from these kind of clay deposits, they're called. And what makes that quite exciting, and we have the rights to use that on all of our salars. What makes it very exciting is that this method uses electrical extraction. In other clay deposits, they have to use quite a bit of chemicals in order to extract the lithium from the clay. In our case, we can use an electrical process to extract the lithium from the clay. It doesn't need a high energy to extract that, and therefore we believe that we're going to be able to use solar power to power the extraction. After the electrical process, we're left with water, lithium, and potassium. And then you put it into an organic mixture, and that separates the lithium and the potassium from the water. Then you extract the water from that solution, and you're left with reusable water. In a lot of these clay deposits, well, in reality, any method of getting lithium out of the ground requires a lot of water. In our case, we're going to be able to recycle the water and use it over and over and over again. So really what that process is a green solution to mining lithium for a green solution to the environmental issue, which is why everybody is moving to lithium. And so we're new into lithium, but we have known deposits, we have this technology, and now we have money so we can do this important work. So we'll take half of that core and we'll send it off to the lab where our chemical engineer has the process to extract it using electrical extraction, and he will then extract the lithium from the lithium and potassium from the clay, and we'll have a head grade from the assaying of the other half, and then we'll compare that, which will give us a recovery rate. And we believe that we're going to have a high recovery rate. And then after we have that material with potassium and lithium, we're going to send the lithium off for purity testing. And that's really important because these batteries need highly pure lithium. And that's what we believe we're going to be able to extract at a very low cost and have a high purity product in lithium. But there's another part to our story, which is the potassium. And Mexico is a major, these projects are all in Mexico, and Mexico is a major farming country. And right now they have no potassium production in Mexico. So it's all shipped from the United States and Canada. That adds a lot of cost. And therefore, only the big industrial farmers can afford the potassium that's needed for farming. Meanwhile, there is a tremendous amount of small farmers, and they can't afford that potassium. And we believe that we will have the first domestic source in Mexico of potassium that will be able to cut the cost of that for the large and small farmers. And, you know, food is also seeing a very significant inflation. And I don't think that trend is going to change. So farming close to the domestic consumers is very important. And the part of Mexico where we are is the breadbasket of the country. And so we're very excited and think that that's going to also help us in our mine permitting, which we would hope to maybe start moving down that road, at least bulk sampling, where we take large samples and test it for the economics, the costs of getting it out of there. And so we've got a lot on the go, and we only have a $4.2 million valuation of all the companies that I followed in this course. We're the cheapest, but we're in one of the most exciting group of commodities you could be. The price of lithium in the last year alone has more than doubled, almost 150% it's up. And that's because of this big move into lithium. But we're an undiscovered gem in the lithium space, and we have a bunch of catalysts that I think will help us to change that very modest valuation. Let's take a look at our chart. And as you can see, we've been kind of flatlining ever since we got into the lithium space. This is a reason why I think we need to rebrand the company with lithium in our name. And we've applied for some names, so I'm hoping to have news on that soon. The 50-day moving average has definitely bottomed back in September and starting to move towards a golden cross. I don't think that that is very far ahead of us. And I believe that the catalysts that have the potential of moving us in towards a golden cross are being worked on right now. So I'm very bullish on lithium. The reason I don't have a lot of lithium companies for this course, this masterclass, is because most of them have $100 to $1 billion valuations. They've already had spectacular moves. And I believe we're an undiscovered gem. So I wanted to bring my company, Advanced Gold, into the mix. And on that note, I better give you our stock symbol. It's AAX on the Toronto Stock Exchange Venture Market. Our current website, we will be changing that when we change our name, but that is advancegold.ca. And as I said, our valuation is $4.2 million. Okay. So there you go, folks. That is all. I forgot. I got a bonus company for you. As I was preparing this show and doing the videos for it, I did an interview with, they just had news out right when I was doing the show, the masterclass, and I interviewed their CEO, a gentleman by the name of Joe Ovsenik. And this is going to be my bonus pick for you, if I may. Their name is P2 Gold. Their stock symbol is P2GOLD.com. And their valuation is 39 million. The nature of that name is P2. It's the key people, Joe Sednick and his partner, Ken McNaughton. They recently had a massive success in the gold mining space. They were involved with a company called Pretium that I picked around $3 a share, picked it multiple times, probably for an average of about $6 a share. And recently they've been going through a takeover with an offer on the table of $18 a share. So it was a dramatic winner for me. And they were instrumental in not only finding that mine, but building that mine. And their name was Pretium, so that's where the P2 Gold comes from. And in this interview I did with Joe, I can hear the sounds that makes me think that they could be the next Pretium, a massive winner. They recently had some drilling results from their Nevada project that were very good. There, it's an open pit target that's open at depth, so it could have both an open pit and an underground element to it in the future. Then they also have another project up in the north, to the north in British Columbia, and it's in what's called the Golden Triangle. And that's where the mine that they found and built with Pretium is located. And they've got a very exciting project there. I think that I would really like, and I'm going to tell you where to find it here pretty soon. So I would really like you to check that interview out, because we talk about the results that they've had, where their projects are. They're in two great camps, the Golden Triangle of British Columbia and in the gold mining hotbed of Nevada. They also have copper potential in their Nevada play. It's a copper and gold deposit, so they kind of have exposure to both the precious and the most precious base metal, if you will, which is copper. Some call it the new oil, and the green oil, green gold, some people even call it. And so they've got a good mix of projects. They've recently had some news out, and I am a big fan of the key people, Joe Ovsenik, and also Ken McNaughton. He's the geologist that found the Bruce Jack deposit of pretiums that is now a 400,000 ounce per year producer at a very high grade. It's got a low cost of production, so it's a very profitable mine. And that's why a much bigger gold mining company has offered $18 to buy them out. And I think Ken McNaughton and Joe are going to do it again, and with P2. And I think you should take a good look at them. Take a look at that interview, because Joe Ovsenik and myself, we had a great conversation, and you'll learn a lot about the company. When I closed off talking about this company, I closed off by saying, here's another sort of flatlining action in the 200-day moving average. And then they had this breakout caused a golden cross here just in the last 2 weeks. And with all the news that they have pending, like they're going to have news flow for the foreseeable future. And it is trading dramatically above that 50-day moving average, which is another indicator that the golden cross, post golden cross, will be very bullish for the stock. And again, they have the catalysts to deliver that. So take a look at P2 Gold. Okay, the next company is Galantas Gold. During my career of picking mining stocks, I only ever picked one company in Ireland, and that turned out to be a fabulous winner. I originally picked it at a valuation of somewhere in the neighborhood of about $15 million Canadian. Ultimately, they, within a couple short years after that, they were bought out by a much bigger company for close to $500 million. So it was a tremendously good pick in my reports. And I think I have my second coming of Dalradian in the company Galantas Gold. Their stock symbol is GAL. They trade on the Toronto Stock Exchange Venture Market, as well as the AIM market in London with the same symbol of GAL. Their website is galantas.com. And their current valuation is around $26 million. Let's start with the news. I'm going to go to, they had a couple news releases out that really stood out to me. Back in November 24th, they had it's even back further than that. I did an interview with them. And yeah, here it is. October the 12th, they announced that Galantas intersects high-grade gold at their Omagh project in Northern Ireland, 17.7 grams per ton of gold, 50 grams of silver, 4.6% lead over 2.5 meters. They also had another hit of 10 grams of gold and 23 grams of silver with 3.3% lead. And there was a quote by Mario Stefano, who's the CEO of Galantas. He commented, "We're very encouraged by the positive start to the surface and underground exploration program, consisting of 4,000 meters of diamond drilling at Kearney and Joshua veins, two of the many high priority targets on the company's land package. Underground drilling on the Kearney vein is testing deeper extensions of the mineralized zones and targeting higher widths of mineralization within the vein. Drilling will also target continuity and grade of additional mineralized zones running parallel to the main body, end quote. So then November 24th, so about a month. Oh, by the way, this is another company that I've done a recent interview on. Later in the show, when I give you my YouTube channel, you'll be able to find that video. And we did that video shortly after they had announced that October 12th news release. Well, then about 6 weeks later, and keep that quote in mind, Galantas Gold drills 26.7 grams per ton gold over 2.9 meters on their Kearney vein system. As I said, 26 grams of gold, 88 grams of silver, 3.5% lead over 2.9 meters. Now, in that video, we did a video interview after this news, and in that, Mario and I discussed some really positive developments in that drill hole. They had seen some historical mining at this project, and it was in a like a clay type material, and they had these underground workings, and they were able to drill from underground in that hole that they released. And what was really interesting about that is that they hit a much more competent rock. And in that rock, the vein got wider and it got higher grade. That's a tremendous trend that you look for in what are called orogenic gold deposits. One of the most famous orogenic gold deposits is the Fosterville mine in Australia. And what happened there was about 20 years of mining, so very reminiscent of what happened here past mining at Galantas. And then they got deeper and they found a fabulously high-grade zone of a couple million ounces of gold in one of these orogenic gold deposits. And that Kirkland Lake had the project, and it gave Kirkland Lake, relative to its peers in the big mining companies, it gave them a tremendous premium compared to their peers. And the reason for that is because this swan zone that they found at Fosterville was tremendously high grade and high margin gold production that really helped their bottom line. Okay, so now getting back to Galantas. Oh, before we do, it's worth noting that one of the key advisors to Galantas is a guy named Tony McCooch. And Tony McCooch is the CEO of Kirkland Lake, who is currently being bought out at a nice premium for them as well. And the reason for that is because they have this high grade, high profit gold mine and also other very good assets. Okay, so now let's go back to Galantas. What made the Fosterville mine and so impressive was it was these orogenic deposits. What that basically means is, and I've mentioned this before, these big faults have cracks in the earth that go right down to the upper mantle. And why that's important is that when gold-bearing fluids are making their way up to the surface, they're looking for a path of least resistance. And that's what these cracks in the earth are. Now, this particular crack that affects Galantas Gold, it goes all the way from Ireland over to Canada and Newfoundland. And remember, I talked earlier about the exciting gold rush in Newfoundland. So it's associated with the same deep fault, crack in the earth that extends from Ireland, well, actually Scotland, Ireland, and over into Newfoundland. Okay, so I think they're onto something like this. And if they are onto something like this, which is what the drilling is suggesting, they will have a much bigger valuation in the future. I think they're on the path that Dalradian took to success. But they have an interesting element to their company as well. It's an interesting business plan because due to all the historic mining, they're able to go back in there and extend and put the project back into production, which they're talking about doing in the first half of 2022. So this would lead to a cash flow situation that would help them fund their further exploration. They're currently drilling on that Oma project, and they recently had some geophysics out that also suggests that there's more deposits, and that's consistent with these kind of deposits. When you have these deep cracks in the earth, the fluids come up from deep from the upper mantle with their gold-bearing fluids, and they do this over and over millions of years, and oftentimes you'll get more than one deposit. And so they're getting indications that that's what's about to happen for them. And we know that there's several veins on there that have never been properly explored. But what I'm most excited about is the potential for them to keep drilling deeper from those underground workings and look for that more competent rock than in the clay type rock, get into that more competent rock and start following that deeper. And the benefit of having an underground workings is that they don't need to drill from the surface to reach those deeper holes. They can drill from under the workings and tag into those, and they'll know they're in it when they're hitting hard rock. So there's that potential with the Truth machine with their drilling, but secondly, they can extend those. They're fully permitted for mining. They can extend those underground workings to chase that harder rock as well. So that's a heck of a combination. And if we look at their stock chart, you're going to see a chart similar to what I've talked about in other companies. They've got the left side of the cup. They've got the bottom of the cup. In the bottom of the cup, they've had a triple bottom. And, that's indicative that those that have wanted to sell have sold. And so now it clears the path for more positive news or more positive movement in the stock. I think we're probably about maybe 2 months from this company having a golden cross that will be very much more bullish. The reason that I have confidence that will happen is because of their news flow. They have a lot of catalysts. They've got more drilling to do. They're going to be talking early in 2022. So over the next few months, they're going to be talking about the restart of mining on this program. So they're going to have a whole series of news releases that I think is why we're seeing this bottoming and the potential for it to have a golden cross in the next 6 to 8 weeks. So this is another one I'm very bullish on. I think they have a very modest valuation, and they're on the path that my last pick in Ireland, Dalradian, they're on the same kind of path, and I think that they're headed towards a lot of success, and I'm very bullish on this company. So have a look at that one as well. So there you have it, folks. It's time to wrap up this masterclass, and we went over a lot of stuff. Don't worry, I'm going to include in the description a breakdown of the various different points in the masterclass. We went through the introduction where I talked about what we were going to do in the masterclass. Then I gave you a little bit of information about me so you can get a comfort level that I know what I'm talking about. I've been doing this for a long time. I gave you a rundown of why I'm bullish on gold, silver, copper, and lithium. Then we got into the tools that I use to find the right kind of companies. Then we went into the shopping list where I talked about the various different companies. And we use those tools, those companies as case studies to use the tools that I talk about. And so I think you've got I started this talking about some of the goals of the show, and I wanted to present a lot of value in this masterclass that far outweighs the cost. And I talked about a lot of the companies and the industries that I'm involved in, but I also think I gave you some information that will be helpful for you as an investor in any company. And I think that it's pretty clear from the length of the video and the quality of the information that I've delivered on my side. Now it's your turn. Now it's time for you to do your homework. Some of these companies are going to resonate with you, and some of them are not. What I recommend you to do is to go to the ones that resonate with you and do your homework on those. You can go on their websites to find their news. You can find their corporate presentations. You can find a lot of information about those companies. Another place that you can do your homework on is on my YouTube channel. You can go there for free and look at tons of videos. I've done interviews with most of the company's executives, the leaders of those companies. I've done interviews with on my YouTube channel. That's at Rocks and Stocks News. Go to YouTube and search for ROCKSANDNEWS. That's all in lowercase. I'm going to put it up on the screen, so not to worry. You can see a lot of interviews on these companies that I've talked about. I think that should be another of your research tools. At the end of the day, I want you to know that this is not a buying recommendation show. I'm not a registered broker. I always close my shows off by saying it's important for you to do your homework and speak with your financial advisors. By doing your homework, you're going to get a bunch of information about these companies. And when you talk to your advisors, you can present them why you like these companies. That exercise alone, again, whether you're looking at mining companies or in any sector, that exercise alone is worth you doing because it makes you have enough information to tell their story. And another benefit of doing that is that you'll get asked questions back. And there's a lot of good stuff to be gleaned from that process. So it's important for you to do your homework. I think if nothing else you learned from this video, I hope you learned how important it is to do your homework on any company you're going to invest in. Why that's so important is over my career, I've found that the best investors are the most informed investors. If you're the kind of investor that hears about something on the internet or anywhere else and you jump on board, oftentimes that stock has already gone up quite dramatically. And if you bought for those reasons alone and the stock rolls over, you're likely to sell. So you're doing the classic buy on the highs and sell on the lows. And you know that's because you're trading on emotions. You're not well informed. Be well informed, and that will help you to make more intelligent and more logical and informed decisions. And those are always the investors that do the best in investing. One other thing that I want to give you is my personal email. You can send emails to me at rocksandstocksnews@gmail.com. That's ROCKSANDNEWS@gmail.com. That's my personal email. That's the one I look at all the time. If you receive something back from me, you're receiving that back from me, not from somebody that works for me. And so by using that and sending me an email to let me know how you like the masterclass, I'll also put you on my email list. So in the future, when I put out courses or I put out free commentary of interviews with executives or analysis of their news, you'll be the first to hear about it through the email. And so I really encourage you to use that email. I love talking about the companies that I follow, the sector that I follow, this course, and the picks in it. So feel free to send me any email you want. And I love teaching and helping, and you can communicate directly with me that way. So I want to close the same way I started. I want to thank you for purchasing this masterclass. I'm very proud of this work. As I mentioned earlier in the masterclass, it's the first time that I've really put down what I do, why I do it, and put together a shopping list. And I think that it's a great product. If you want to recommend it to anybody else, I'd certainly appreciate that as well. So on that note, have a great day. Enjoy the masterclass. Do your homework and get a hold of me. We'll talk to you soon. Have a great day.